Yo, welcome back to the channel. Welcome back to the channel. Who we got in the building? Today is Thursday, February the 26th, 2026. Man, February has flown by so far. Has flown by already. Who we got in the building, man? Give y'all a little crypto update, crypto analysis. Might do some deep diving. What's up, TZ? Shout out to you, man. Shout out to you. What's up, Lenny? Shout out to you, Lenny. Chicago in the building. I'm coming to do some crypto TA. Probably start from the lower time frames up. That was my idea for this one. Probably go from the low time frames up to show people that this shit ain't random. Make sure y'all smash that like button, man. Get a few minutes. Starting off with Bitcoin. I'm gonna start off with Bitcoin. Let me see right quick. Mudvayne. Shout out to you, Mudvayne. Ain't seen you in a minute. Shout out to Baton Rouge in the building. Baton Rouge, Louisiana. Who else we got in the building? All right, I'm gonna start with Bitcoin. I'm gonna work the XRP, and then we can cover some other assets if we feel the need to. Y'all can give some suggestions on things y'all want to look at. We can check them out. But we're gonna start on Bitcoin. Bitcoin is currently trading at 67,050-ish. All right, I'm gonna do a down up analysis instead of a top down. I'm gonna do a down up. So right now I'm gonna start on the. Well, my bad. I was on the daily. Well, since I'm on the daily, I'm gonna go ahead and start with this daily chart to get a right now perspective on Bitcoin. So right now, Bitcoin is consolidating, right? It's consolidating sideways. But what I want to do is I kind of want to get a 20-day range on Bitcoin. So what I like to do is I like to start on the current candle, which it is currently Friday, Asia in the crypto market. I'm going to look back 20 days. All right, right there, 20 days. So if I just get a quick little range in the 20 days of Bitcoin, it's clearly been in a what? Y'all tell me in the chat. What has Bitcoin been in the past 20 days? Damn, it's been 20 days already since it sold off. It don't seem like it's been that long, but it peaked out during the 5th of February, and it's already been 20 days. That's crazy. Yes, it's in the discount, but it's also what, Lenny? It's consolidating, right? It's sideways. And I just feel like, excuse me, back on the 5th, you know, it was running lower for consecutive days. And then it peaked out on the 5th on this candle right here. And then it went sideways. And what I was saying was it don't even seem like it's been 20 days since the 5th. But it has clearly. But in this scenario right here, I kind of want to get a 40-day range because we've been consolidating in the past 20 days. So what I want to do is I want to get a 40-day range for Bitcoin. And when I just look back 40 days, I'm looking for a swing point. Boom, right there. All right, I'm going to take this range right here from this swing high right here down to this swing low. I'm going to use that as my range for Bitcoin. This swing high down to this low right here. And you was right, Lenny, it's in a discount. Make sure y'all smash that like button. What's up, AWB? Going over some crypto, man. Going over some crypto. So yeah, you was right, Lenny. Discount for Bitcoin. And what I did was I stripped everything off my chart, right? I stripped everything off my chart, and I'm pretty much going naked. You know what I'm saying? Pause. But I'm going naked. Now this range that I highlighted, right? This range that I highlighted, you can do it a 40-day, or you can even extend it up to this high right here. It's up to you. You can go from this swing high right there, which began the move, or you can refine it from that high right there to that low. And I want to say that's a 60-day range. So let me go back. 60 days. Yep. So I'm going to do a 60-day range for Bitcoin, because we've been trending, and then now we recently been consolidating. But if we just look at a 60-day range, we're currently in a discount side of the range, right? Discount side of the range. And we just been consolidating sideways. Now, this consolidation, right, is leaving people confused, I don't know what the sentiment is. So before I move forward with the analysis, right, some things I like to do is I like to just go to YouTube and see what's the public sentiment. Or I can go to X. Let me pull up X and YouTube. And how I utilize these platforms is I like to go look for the sentiment. So I'm gonna pull up X. Pull up X right here. I'm gonna go up here and type in Bitcoin. See what the people are saying about Bitcoin. I want to see what the people are saying. So let's see. This guy right here, February the 24th, generational buying opportunity with Bitcoin at $65,000. Okay. Do y'all think it's a generational opportunity to get Bitcoin at $65,000? Y'all let me know in the chat. Is it a generational opportunity? What else? Bitcoin is the next world reserve currency from that guy right there. So I'm just getting sentiment, right? I'm just getting some sentiment. This is how and it's funny to me, these analysts, you know, these people that are on X and social media, you know, they just pretty much screenshot a chart, right? They'll screenshot a chart without, you know, what does this guy say? This is how 3 to 6 months in crypto bull run will change your life. I'll share you my secret strategy. It's simple. You are not going to buy Bitcoin. Instead, buy altcoin, meme coins, etc. Da da da. All right, whatever. It's a lot of bullshit that you got to filter through on YouTube X. AWB said nope. It's coming down to 58K or lower. We're gonna look into it, man. Make sure y'all smash that like button. And I'm just trying to get some sentiment. It's really like a lot of bullshit and noise. And a lot of people refer to X for their content, right? What this guy say? 2.5 trillion banking giant Citibank said Bitcoin is still going to 189,000 this year. Tighten your seatbelts. Okay, whatever. Right, whatever. The fear and greed index. Fear and greed. There's a lot of what is this over here? Because I don't know. Oh, extreme fear. So they're posting that it's extreme fear in Bitcoin. So what does that mean? Buy? Is that a buying opportunity? We're going to look into it, man. I'm going to break down the price action. Make sure y'all smash the like button for me. Wait a minute. Okay, I'm about to say, what the hell? Why am I up here? But that was from 2024. I get it. Can I filter do this? Anywhere, people you follow from anyone. All right, whatever. So let's go to YouTube right quick. Let's go to YouTube before I move forward. Let's go to YouTube. And what I'm doing is I'm getting Bitcoin sentiment. And I like to go into the algorithm, type in Bitcoin. And let's see. Bitcoin manipulation found. All right. Just getting sentiment. Bitcoin manipulation exposed. They are shorting MicroStrategy to zero. Did BlackRock use ETFs to control Bitcoin's price? So it seems to me there's a lot of negativity right now for Bitcoin and the crypto market in whole, right? There's a lot of negativity. Bitcoin midterm year returns. Michael Saylor reveals why Bitcoin is actually crashing. Did he really reveal it? I'm not going to get into it here, but that's interesting. How is this guy holding up? For y'all that keep up with this, how is this guy holding up with his company MicroStrategy? He went all in into Bitcoin. How's that turning out for him now? If y'all keep up with it. So just visually glancing at X and YouTube, there's a lot of negativity around Bitcoin, right? Because of, look, Bitcoin trap. That's all he had to do for his title, right? And he got almost 10,000 views. What am I doing, right? Because I'm here to give y'all the real analysis, right? So let's come back to the chart. And let's frame it up, right? So Bitcoin, if I just zoom out right quick, Bitcoin peaked out about 126,000. And it's been down ever since, from 126,000 all the way down to 67,000, right? So a lot of people are long-term investors in Bitcoin, but what the institutions are doing, if you follow me, if y'all in my group, y'all know, but for the brand new people, institutions are trading this market instead of, they got some long-term holdings, but they're mainly in here rolling up their sleeves. Right. So let's just look at this 60-day range for Bitcoin. It's been trending down and is consolidating currently. Let's go down to a lower time frame, right? This might not mean nothing to some of y'all, but let's go down to a 15-minute. Let's go down to a 15-minute time frame. And let's start right here, right? I want to get enough perspective about right there. So when we go down to the 15-minute, we're looking at the market from a intraday perspective. So anything below the daily time frame, you're looking at intraday price action where day traders are residing at. And some of y'all might think, hey, why does this matter? But it definitely, you can find plenty of opportunity in this. But I just want to look a little close at Bitcoin. So on Wednesday, right? On Wednesday. Today is Thursday. What's up, Daryl? What's up, Jay Gamble? Appreciate y'all joining, man. Shout out y'all. But on Wednesday, right? Wednesday, which was yesterday in the States, price ran up, right? And when it ran up, look over to the left of the chart. When it ran up, what do y'all see over here? I wanna do a pop quiz for y'all that watch me. What do y'all see over here in the chart? On the left side of the chart. Y'all might not can see it, but do y'all see something interesting? What do y'all see over here? Equal highs. Okay, AWB. Let's just do it for now. Let's do this right here. Let's grab this high right here. And let's do this right here. These are highs right here. You're referring to these highs right here, AWB. Let's use these. And we drag them all the way over to the right, right? So those highs right there is resting orders in the market. You might not believe it, but there's resting orders in the market that the market makers on these fractal time frames leave behind, right? They leave behind orders and they're back and forth in these markets. So if you don't trade, I wouldn't expect you to know this, but why does the market sell off, right? And then why does it go back up, right? Is it buying and selling pressure? Is it retail? Is it the bulls and the bears? Why is price going back and forth in here? I see a complete model right there. I see a sell model and a buy model, but that's interesting. But we rally up on Wednesday, right? And we take out these highs right here. And we also clean out some highs over here to the left. Let me show you this high right here. Let me show you that high right there. Drag it over to the right. And above that high, right, is buy orders, buy side liquidity, right? And they did it on Wednesday in the afternoon. What was they doing? They was buying down here at discount. They ran up, took out liquidity, right? Which is where they're offloading their long position. So they're making money back and forth, buying and selling. While most of retail that's on YouTube, let me show you, most of these people over here, they are using the sad faces. They're dropping their jaws. They're left without, retail. Just they're left without knowing what's really going on in the market. But what's really going on in the market is prices controlled by AI and algorithms. Y'all that been following me, y'all should know that by now. Y'all know that. But for the brand new people, y'all, that's what's going on pretty much. And for the people that's on the outside without this knowledge, for the people that's not understanding that price is controlled by algorithms that we can predict, these people right here, right? It's these people that are left on the outside of whatever. Bitcoin death cross, time to act. Huge Bitcoin buy signal flashes. These people are misleading and they're uninformed. They're uninformed. Let's come back to the chart. And if you're just joining, man, I'm giving you concepts, right? I'm giving you concepts. The stuff I'm showing you, you can apply. So we took out liquidity Wednesday, right? And then this vertical trend line right here, this line right here that I got highlighted white, that is 12 o'clock midnight. 12 o'clock midnight, right? New York Eastern Standard Time. 12 o'clock midnight, New York Eastern Standard Time. So once we cross over to midnight, right, we enter London. And this was today's price action so far. We consolidated pretty much, but there was some opportunities in here. But we need to go back to Asia last night. Let's go back to Asia. Let me highlight the Asia session. Y'all know what the Asia session is in the chat? Do y'all know what time Asia begins? Do y'all know? And then you go back to the New York session. Let's go back to New York. New York session. What time does the New York session begin? Y'all know in the chat, what time does New York session begin? Anybody know? $9:30 Central. Now we don't go by Central Time. We don't go off Central Time. We go off Eastern Time. Whenever you're looking at these markets, you got to view them from an Eastern time perspective if you're gonna deal with these concepts that I'm showing you. Jay Gamble, you say 8:30. So let me help y'all out. If New York session, right? The session begins at 7 a.m. and this is universal for all markets. This goes for crypto. This goes for stocks. This goes for Forex. This goes for futures, commodities. 7 a.m. right? The New York session is from 7 a.m. to 4 p.m. New York Eastern Standard Time. So if we're looking at Bitcoin right here, right? During that time window, price ran higher to target what? Liquidity. And within that time window, right? Is it random? I need y'all to participate. Is it random during that time window that price will run for that liquidity way back here? Boom. And this was from a week ago, a previous week. This was from the week of the 16th. But is it random in that specific time window right there that price will run for the liquidity and then stall out and do nothing else, and then it breaks down, right? Do y'all think that's random? No, I don't think that's random. Let's take a closer look in this time window. So let me draw it out for you. Let me draw it out. Let me help y'all out so y'all can understand. Y'all should be taking notes, man. If you just watching me and not applying and, learning and actually doing this shit yourself, then I don't know what y'all watching me for, because I'm sitting here giving y'all free game. New York AM, 7 a.m. Well, let me do this. New York session, 7 a.m. to 11 a.m. 4 p.m. Blow that up a little bit. Right there. So that's a window in time, right? That's a window in time. It reoccurs every day. Window in time, it recurs every day. Now let's take a closer look in this window. Let's go down to a 5 minute. Let's go down to a 5 minute, right? So during the New York session, right, there are 2 kill zones. Now check this out, peep game. There are 2 kill zones inside of the New York AM session. Do y'all know what they are? There are 2 kill zones. Kill zones and sessions are 2 different things. Kill zones are specific windows in time inside the session. So the session is from 7 a.m. to 4 p.m. Eastern Standard Time. Let me put that on the chart. Let me plot that out there for y'all. Lenny, 10 to 11 and 2 to 3. Those are the silver bullets, Lenny. Those are the silver bullets. That's a little bit more. So that's a more refined time inside of the kill zone. So let me help you out. The kill zone is from 7 to 11, right? So let me do this. The first kill zone is from 7 a.m. to 11. The second kill zone is from 2 o'clock to 4 o'clock. All right, 2 o'clock to 4 o'clock. Now let me highlight this. Let me find a way to outline this. Let's take a rectangle from 7 a.m. to 11 a.m. It's slightly different than futures, right? Because this is a 24-hour market. I kind of treat it like the foreign exchange market. So you know, in the there's pre-session. So what this is doing is it's encompassing pre-session and the AM session together. So it's one big session. So let me highlight this. Let me label it. Let's label it right here. And let's say AM kill zone. We're going to say, what is it? 7 a.m. to 11 a.m. 7 a.m. to 11 a.m. If you're not taking notes, if you're not understanding, or if you're just watching, just be watching. You might be new. You might just be new. I don't know. But you should be picking up on what I'm giving you. Make it a little smaller right there. All right. So we're going to focus on, okay, let me drop that right there. Make that a little bit smaller. Appreciate the love. Appreciate the love. Jay Gamble, QSO. Does kill zone mean that is when they are finding liquidity from previous sessions? No, that's not what it means. Let me explain. A kill zone, first of all, okay, the session, right? The session is when. Okay, let me explain this. The session is when the peak volume comes into the market. What does that mean? Algorithmically, the time of day where the algorithm is going to allow the volume to come into the market is during specific times of the day. For example, from 7 a.m. to 4 p.m. is the session where the volume comes in the most during that time frame. Now just look to the left, right? It started at midnight. Let me take this white vertical trend line and I'm gonna plot it on Wednesday at midnight, because Wednesday at midnight is when the algorithm comes online. Every day at midnight is when the algorithm resets. So that's what I'm trying to say. Every day at midnight is when the algorithm resets. So, okay, the algorithm resets right here at midnight. And what does it do? It consolidates, right? It consolidates. And then what time does it enter what time frame does it cross when the volume picks up? So it crossed right here at 7 a.m. right here. And you tell me, does the volume just pick up? Is that random? And does it, when it picks up, it goes for liquidity? And then after the kill zone, right? After 4 o'clock, what does the volume do? It drops off, right? It drops off a little bit. So is that interesting or not? Is that not algorithmic? Did you understand that? Did I explain that correctly before I move forward? Did I explain that clearly? The session is specific time of the day when the volume comes in, specific times of the day when the volume is being injected into the market, and it's a time-based mechanism, right? It's time-based. So prior to 7 a.m., the market is a little quiet, right? And then once 7 a.m. hits, it takes off. I don't think that's random. So the kill zone is the sweet spot, right? The kill zone is the sweet spot for the session. Jay Gamble, okay. I appreciate the breakdown. I seen you mention in your last few videos, but I didn't get the details like this. Oh, all you got to do is ask, man. All y'all got to do is ask. Y'all got questions, man. Ask the questions. I'm sitting here giving free game you ain't supposed to know. I'm teaching you algorithmic concepts. And all you got to do is go open up your own charts and go see it for yourself. But you know why people can't do that? Because it takes their time. People don't want to put the time and the effort in, and it just takes their time. But I'm sitting here giving you the free code to the algorithm. So what you can't see, let me explain this. What you can't see on this chart, right? What you can't see on this chart is time. What you can't see on the chart is time. The market moves based on time first and then price. So it waits for specific times of the day to move, and then price, it starts to seek price at certain levels. And then once the time of the day ends, specific times of the day, when it ends, then the price goes into a quiet phase. Can't make this shit up. So 7 a.m. to 11 a.m. is the AM session kill zone, right? It's the AM session kill zone. And when we cross over at 7 a.m., what does the market do right out the gate? Boom. Breaks out. Now let's drop down to a 1 minute. Just caught this live. I've been watching the reruns. Okay. Shout out to you, Jay Gamble. Let's go back. Let's go down to the 1 minute, right? Let's go down to the 1 minute. So on the 1 minute, right, I'm showing you what the session looks like. The AM session, 7 a.m. to 4 p.m. And it pretty much went vertical this particular day. But once we crossed over at 7 a.m., right, we can refine time down into more specific windows and price. So and y'all probably heard me mention this before, every hour price at specific times of the hour, every hour price is trying to make moves. There's moves that price is designed to do every hour. Those times of the day are called macros. Those macros happen at the end of the hour and the beginning of the hour. The last 10 minutes of the hour, the first 10 minutes of the hour. That's a 20-minute window in time. So watch this. I'm going to pull this up. I got this little indicator, right? It's called macros. Let me pull it up. Indicator, macros. 1 second. Right here. Boom. All right. And I'm going to pull that up on my chart. Settings. 650.17 right there. All right, let's pull that up. All right, there's something called macros, right? Specific times of the day when the market moves. So right before 7 a.m., right, the market, and this is a macro, right? This macro is from 650 to 710. So what am I trying to illustrate? This window right here, this little window right here in price. That window right in price. So from 650 to 710, the market crosses over into 7 o'clock. And what does it do? Right at 7 o'clock, it rallies higher, right? Price goes up. Let me remove this. Let me do this right quick. 1 second, y'all. 1 second. Put this up. Show time right there. Show the time. All right, from 650 to 710, price spikes up. And when it spikes up, what does it do? It clears out liquidity. So look to the left. It goes up, clears out this high right here, right? Clears out that high, which is buy side liquidity, and then it drops. And when it drops down into, y'all in the chat, what is this right here? Y'all in the chat, what is this right here? Y'all tell me in the chat. Y'all in the chat, what is that? Shout out to you, Daryl. BTC fair value gap, right? It's a BTC fair value gap. So algorithmically, price is consolidating, right? Right before 7 o'clock, price is in a what? Consolidation. It's just sideways, right? And then right at 7 o'clock, it spikes high, take out liquidity. And what is that doing for traders? They're confusing traders, right? They're thinking they're making traders think it's going to break out. And then it breaks down. It takes out these lows right here, liquidity, and it drops right there into a BTC. Boom, just like that. Y'all tell me if that's random. Is that shit random or not? Is it random? Y'all tell me, is it random? Because I don't think it's random. Let's further, I want to do a little bit more details. Let me draw a Fibonacci in the gap. Let me draw a Fibonacci in the gap, right? Draw this Fibonacci from the high down to the low. Y'all see me do this before, especially if y'all that's been here. Y'all see me do this from the high down to the low. This is called my gradients, right? This is my gradients, how I can measure the gap for weakness and strength. But let's also do this. I can add more levels. Let's add the eighths. Boom, right there. So we go from quadrants to eighths, right? All I did was add more levels. So when it drops down into that gap, is it random that price hits this level right here? Now, I don't think that's random. If I zoom in a little closer, let's go down to a 15-second chart. Let's go down to a 15-second chart. Some of y'all are like, 15 second. Yeah, man, 15 second. Let's go down all the way down to a 15-second chart. And we zoom in a little bit. When we drop down into a 15-second chart, right, you can see how price drops down and tags that level. Now, I might have to go down a little closer. Let me do this right quick. Let's go split screen. Over on the split screen on the right, I'm going to go down to like a 1 second. I'm looking for details, right? I'm looking for something. I'm looking for something in price. I'm trying to see if I can further refine price a little bit more. Fuck. See, I got to go to a 5 second. Y'all bear with me 1 second. Trying over here on the right. I'm trying to go down to lower time frames because I'm hunting for something. I'm looking for something. I'm trying to see if it's there. Anyway, I'll say that for another time. I'll say that. Let's come back to the right here. But anyway, my point is, look how it drops down with the precision. It drops down to that level right there. And then price during the macro, right? During the specific time of day, it rallies higher, right? On a 15-second chart. And when it rallies up, after taking out these lows, these liquidity over here to the left, it displaces higher. And on a 15-second time frame, y'all in the chat, what is this right here? What is this? What is that right there in the chat? It's a BTC. Yep, BTC. Buy side imbalance, sell side inefficiency, which is a fair value gap. Yep, fair value gap. Now you could do the same thing. Look, on a 15-second time frame, this might be fast for you, but in due time, I'm showing you how the price is algorithmic. Same thing when I drop a Fibonacci in that fair value gap. Is it random at these levels? No, it's not. It drops down into that level and then boom, displaces higher. And when it displaces higher, it's reaching for something. It's reaching for something. So let's go back out to the 1 minute. Go back out to the 1 minute. And when it displaces higher, right, after dropping down into this fair value gap, it displaces and is looking for what? Look at these highs right here. This is what algorithms are doing. This is what the smart money are doing. They're they're putting on big money, big money. Y'all can't even imagine how much money they're putting on trading these markets. But look at these levels, right? These highs. I'm on a 1 minute time frame, but I'm showing you how price is algorithmic and it's constantly seeking liquidity. It's constantly referring to certain levels and it's doing it based on time. And this is Bitcoin. And everybody, check it out. Everybody on YouTube are in fear. There's panic and fear in crypto right now. But does it have to be panic and fear if you learn this skill set and you can see opportunities like this happening over and over and over again? Because that's what they're doing. Everybody else is long-term investing into crypto while smart money is taking daily opportunities. They're taking opportunities by the second. And I've been trying to get y'all to see this on this channel for the longest. They've been taking opportunities for the seconds. Every second there's opportunity for them. But for you, we caught in the rat race, you know, working your 9 to 5 And it's like, there's a way to get around this shit. You just got to learn this skill set. But look, from this low right here, they take out liquidity, then they drop it down to this fair value gap, which is a BTC. Then they shoot it higher, right? And they're taking profits at these levels, and they continue to shoot it higher to aim for higher levels, which was that higher time frame level way up here. And this all is occurring during the New York AM session. And then boom, they get up here to hit their target from weeks ago. They hit their target from weeks ago, and they're offloading their positions, and then they shorten it back. They short it right back down. Check it out. When they take profits, right, this is what they're doing. They rally it up. They go up to a key level. They offload their longs. Let me show you this. You got a BTC right here, right? I mean, a SIBI. When they offload their longs, right, and it happens during a specific time of the day too. They offload their long positions and price starts to drop. What is this candle right here in the chat? This candle right here, I refer to it often, but what is this for y'all that been watching me? What kind of candle is this right here? If you just joined and we're looking at Bitcoin, what kind of candle is this right here? What's up, Jay? Jay Manson in the building. What's up? What's up? What kind of candle is this right here, y'all? I got to coach y'all up again. It's a order block. Yep. It's a bearish order block. So they're offloading their positions up here. They hit a key level. This line right here, that's a key level, right? It's not random that it rejects off that low. Not random at all. And then the market drops, right? And when it drops, it consolidates and it trades right back into the what? Order block. Look what time it is. Remember I just explained to y'all what a macro is? Well, this was a macro during 150 and 210 in the afternoon. What's 150 to 210? That's the PM session, the New York PM session from 2 o'clock to 4 o'clock during the PM session. Is it random that during the New York session, they send it higher, and then at the end of the day, they offload their positions at 2 o'clock to 4 o'clock? They're offloading their long positions, and they're actually shortening it back. They're actually shortening it back. Let me label this. All right, New York PM session, right? So after that long rally up for Bitcoin during the day, they hit a key level, they offload their positions. And now during the macro, 150 to 210, which is the last 10 minutes of the hour and the first 10 minutes of the top of the hour, it's a 20-minute window. They create a move that allows them to short, right? Look at this window right here. They create a move, and it's a nice little move that allows them to short during specific times of the day. Specific times of the day. It's not random. Not random at all. So do y'all think that's random at a specific time? They allow themselves to get in at the market and short it down. And when they're shorting it down, what are they aiming for? Well, they're aiming for a few targets. Look at this low right here, right? Look at this low right here. Below that low, they left behind liquidity. Liquidity. Let me find it. 1 second. Minor. Sell side right there. All right. So below that low, right? They leave behind sell side liquidity. So y'all would go crazy. Y'all win in the match. Excuse me. Outlaw Crump. Is there a certain percentage you could find? What do you mean, Outlaw Crump? When you say a certain percentage, what do you mean? I can measure this. Let's measure. Let's say I enter up here and it drops down to right here. I mean, that's a 1%, depending on how much equity you got, but that's a 1%, which is amazing. That's a 1% run on price. So from up here at this level right here, they're offloading their positions and they're shorting down. And look, and when it shorts down, it consolidates and consolidates, consolidates. Check this out, y'all, for y'all that's in my Discord. This swing high, right? This swing high to this swing low. Let's say you missed this, right? Let's say you missed this little drop off right there. And then the market goes into consolidation. And on this 1 minute time frame, I hit this number right here. This swing high down to this swing low. I'm going to define a Dillar range, just like I did on the daily. Define a Dillar range. So if you just focus on that little segment in price, the Dillar range, we drop down. We take out this low right here. Take out this sell side liquidity right there. We sweep it and it goes in back into the range. So from high to low, premium to discount. When it's at, we're still bearish after that long run, we go up into the premium side of the range. If you're looking to short, you want to short it at a premium. If you're looking to buy, you want to buy it at a discount. Well, in this scenario, I will be looking to short. And what does price do? It trades into a premium, which is from the middle of the range, which is equilibrium, up to the premium of the range. It trades up into the premium of the range, right? Now time. What time? Fuck. 1 second. What time? Macro 250 to 310. That's the last 10 minutes of the 2 o'clock hour and the first 10 minutes of the 3 o'clock hour. It consolidates, right? Why is it consolidating? Look over to the left. What do you see? What is this right here? Let me highlight it for you. This right here is a what? SIBI. Sell side imbalance, buy side inefficiency. That's not random. On the premium side of the range, trades right into the range, consolidates. Specific times it drops. And when it drops, it goes low resistance, right? Low resistance liquidity run. And what does it target? Original low right here, boom. If we want to get real fancy with it, look at this little BTC right there. Buy side imbalance, sell side inefficiency. Highlight that, drag it over here to the right. Take out liquidity, boom, just like that. It can trade through it a little bit, But then what do? They reverse off of that level, not random. 10 a.m. percent drop. 10 a.m. percent drop. I don't know what you're talking about, Outlaw Crump. Maybe I'm confused a little bit. We say, because at 10 a.m. the market went up. At 10 a.m. on the 10 a.m. of this particular day, it went up. Right, I'm looking at the New York session. It went up, and we're talking about the PM session, right, which is in the afternoon. It dropped in the afternoon, and when it dropped, that's what we're showing right now. But yeah, it took out liquidity, and then look, once it takes out liquidity, smart money, market makers, algorithms, what are they doing? They grab the liquidity, and they show displacement. They show support, right? And y'all in the chat, what is this right here? After taking out liquidity. It has to be after taking out liquidity. What is this right here? Y'all in the chat, what is that right there? I'm going to help y'all out, highlight it for you. Boom, what is that right there? Give it another color. What is that right there? Y'all come on now. Y'all get some participation. Make sure y'all smash that like button, subscribe to the channel. Y'all get some participation. Buy side, you mean BTC? Buy side imbalance, sell side inefficiency, which is a fair value gap, right? It's a fair value gap. That's a BTC that's inside of a larger BTC. Oh, I got to include this as well. Let me pull this up just a little bit for details. You got to refine it because there's a small little volume imbalance in there. You got to combine that. But look, after they take out profits, after they short, right? That's a nice short run that they did. They buy it back. BTC, 1 entry, 2 entry, it displaces up, right? And when it goes higher, what is this? What is this? I'm showing you how many multiple ways that the algorithm is performing. What is that right there, y'all? What is that? What's up, Coleman? Can you check out H-bar? I'll check it out here shortly. We're going over Bitcoin and XRP right now. I'm going over how price is algorithmic. And I'm trying to teach y'all how to catch your own fish. Yep, that's a BTC. So let's say you missed down here. Here goes another one right here. Okay, what is this right here? Let's say you missed both of those. Y'all don't see that, but what is this right here? I'm gonna show y'all this. I'm gonna highlight this. I'm gonna give it another color. What is that called right there? I'm gonna give it another color though. Let's give it that color right there. What is that right there in the shaded pink? What is that? What do we call that? We trade through it, back into it. Yep, inversion, fair value gap, right? So what am I showing y'all? I'm showing y'all multiple ways to catch your own fish. I'm showing y'all multiple ways to catch your own fish. They short the market and then they buy back at discount. And I'm showing you multiple ways to get in. BTC, inversion, another BTC. Okay, I'm not done. What is this? What is this candle right here? Can y'all see that? What is that candle right there? The down close candle. I'm gonna highlight it for you. Right there. Crypto is pretty clean, man. Crypto is pretty clean. While everybody else is complaining, this shit is trading pretty cleanly. Yep, order block, bullish order block. So what I just showed y'all was 4 ways. You know what I'm saying? 1, 2, 3, 4 different ways to get in price, and then it takes off, right? Takes off, trades back up. And when it trades up, what did it hit? It hit something. But it takes off, right? It takes off, and oh, there it go, right there. When it goes higher, right, it takes out liquidity. But also, what did it do? It went, this is a range right here. From this high right here, let me show y'all the range. This swing high down to this swing low. So this is the, let me label it. This is the dealing range. We drop down, we take out liquidity. And when we take out liquidity, right here, they're buying on what side of the range? When I'm showing you this right here, accumulation, what side of the range are they accumulating on? Y'all tell me in the chat. What side of the range are they accumulating on? Who's the smart person in the room? What side of the range are they accumulating on? Yep, Jay Manson, discount. They're accumulating at what? Discount. If they're looking to be buyers at discount. After, why is this discount? Because we took out liquidity right here, right? And we seen displacement. So this was discount side of the range. So they're in there buying it. And then when they go up, guess what they're doing? They're pulling profits. Let me move this. They're pulling profits at these highs right here. You see these highs? They're relatively equal, right? So they're pulling their profits at these highs on the premium side of the market. On the premium side of the market. So they're buying at discounts and then they're selling at premiums. So they're buying down here. High frequency trading, by the way. High frequency. This ain't none of that retail shit holding for months and years. No. They're doing this by the minute, by the second. And that's what I'm trying to show y'all. That's what I'm trying to tell y'all. That's what I'm trying to get y'all to understand, that they're operating at another level while you're sitting there hoping and praying that crypto is going to save you. They're playing a whole different ball game. That's why they can tank the markets. That's why they can send it higher, because they're playing this game right here. They're accumulating down here at discount and they're taking profit right here at these highs on the premium side of the goddamn range. Right? And it goes a little bit higher. They're paying themselves a little bit more. It's not random that they hit this level. We go into a macro and the day closes for the PM session. Now there's other sessions, but I'm not gonna, for time's sake, I'm not gonna go into all the other sessions. I just want to show you New York session, right? The New York session. And if you're somebody who works a job, right, and you don't, you need to earn that extra money, well, you can, from 7 a.m. to 4 p.m., you can find some time. There's some things in here that you can find some time and opportunity to be a participant, no matter what kind of hours you do, right? Let me zoom out a little bit. That's all on the 1 minute time frame. I'm just showing you. I can get more crazier than that. I can get crazier than that. I can go to lower time frames. XRP 99.99% 5 digits. Shit. Yep. It's gonna get there. But some of y'all are older, man. I don't think some of y'all got enough time to be waiting. Some of y'all are ready to retire, right? But guess what? XRP might not be ready to go for the next 10 years. I ain't gonna say that long, but I'm just saying, like, bro, life ain't promised. You know what I'm saying? Life ain't promised. So we got to make things happen. And I'm just showing y'all ways to make this happen. All right. So that's XRP. Y'all got any questions, man? Y'all got any questions? I like the feedback. And it's not XRP, my bad. This is Bitcoin during the New York session. Let's go back out to the 15-minute time frame. I'm just teaching y'all smart money concepts. Smart money concepts. Let me hide this. Hide the macros. All right. Now let me look and see what happened today. 1 second for Bitcoin. Let's go into today's price action. So 7 a.m. to 4 p.m. Now I don't need to put these up on my chart. I just know internally what time of the day it is and when the price is going to do what it needs to do. I just know that internally. But okay. And let me remove some of this stuff. And I'm gonna do, let's say 7 a.m. right here. This is the AM kill zone. AM kill zone, 7 a.m. And you got the PM kill zone. No, Lenny, I ain't call you old, Lenny. I ain't call you old. I said some people, Lenny, you good. But some people, man, you just, you know. So, okay. At 7 a.m., right? Let's go down to a 1 minute. Let's go down to a 1 minute. So today was a little choppy for Bitcoin. Today was a little choppy. So at 7 a.m., right? Where's midnight? So midnight is right here. Midnight is right here, right? This is midnight on Thursday. And the first thing I see is all these lows in here. These lows. That's a level of interest, right? So I'm going to go ahead and mark that out. Sell side liquidity pending orders. They're going to attack them or they're going to absorb their orders. So for the people that trade, right? For the people that y'all see on trade, some of y'all famous crypto people, they like to go long, right? So this low right here, they went long. Let's say they went long yesterday because they put their orders in and they think Bitcoin is going to go up from now. For now. And then you got people like this. Where I see that at? Where did I see it at? I just seen a guy talking about now's the time to buy. Now's the time to buy. Where did he go? I was just gonna use it for sentiment purposes. Where's the guy? Oh, right here. So this guy right here, the bottom is in, right? Huge buy signal flashes. The buy is in, huge buy signal flashes. So people like that, right? He's enticing y'all. He's enticing a lot of people to go in the market that like the leverage trade. Then he's enticing people to go in there and put orders in. So whenever you do that off of impulse, let's say you put your order in yesterday, right? In the afternoon, you got off work and you seen this guy. He was like, this guy he kind of makes sense. Let me go ahead and put me an order in. And you put that order in, right? And then the following day, it does this on you. It drops, right? So now you're underwater, right? With leverage. So you're underwater with leverage. So now you just got to sit there and deal with it. You got to sit there and deal with it. So crossing over during the New York session, right? They got a lot of liquidity as a trader. They left a lot of liquidity in the market. So you got overnight lows and you got previous day's lows, right? So when they cross over at 7 a.m. and the macro hits, let me pull the macro up again. The market is very choppy during this hour. Very choppy, right? Very choppy. But then we cross over at specific times of the day and we got a range, right? Let me show you the range. Let me show you the range. From this swing high right here to this swing low right there. That's a dealing range. That's a dealing range. And that daily range forms during the macro 750 to 810. That's a macro time. During this time, price drops down, right? And it comes back up to the premium side of the range. When it comes back up to the premium side of the range, it trades into this small little sibby right here. Now you tell me if that's random or is that not precision when it trades into these levels on the premium. It's in a premium in this range. Trades into this small sibby, pokes it, and then pokes it one last time, feels it. And then price drops. And when it drops, what is it targeting? It's targeting these lows in here, liquidity, sell side liquidity. Right there. And then is it random? Is it random how price reverses off of that level? Look at these lows right here. Is it random that price will reverse and go back inside the range? And then what happens next? That range becomes a wider range. So that low right there, I just widen the range, spread it out to the right. And price goes back to a premium. Sweeps liquidity right here. And then it finally drops one last time. It drops one last time, low resistance during a time window. Macro, 850 to 910, specific time of the day, 850, 910. Last 10 minutes of the hour, first 10 minutes of the top of the hour. Also, 910, 850, 910, that's a key macro time right before the equities open at 930. And then guess what price does? It drops. And when it drops, it goes low resistance. Not random, and it attacks this low right here. Didn't we just see that today? Didn't we just see that today in the NASDAQ for y'all in the community? Just seen that shit today in the NASDAQ. Same fucking setup. Run up, macro, sells off. Let's get a little bit more crazier. Let's look at some high frequency. Omar, is your Fibonacci on manual settings or you just adjusted? I got my Fibonacci. I got different Fibonacci settings. All right, so I can draw my Fibonacci out. You can save your Fibonacci, so that's what I do. But I got different settings. I can show you my settings. Like I got different Fib tools for different things. So when I pull this up on the screen, there's different things that I use. Right, there's different things that I use, and I save them. So you see where it says save drawing templates. So whatever I draw up, I can save it and I can always refer to it at any time on demand. So that's what I'm doing on demand. So I could just toggle between what I want to look at. So I want to focus on this little piece of price action right here, right? I want to focus on this right here when we ran up, right, and took out liquidity. This little swing high, this is called minor side liquidity. I want to drop down below a 1 minute. Right, so I want to drop down below 1 minute. So I'm gonna do this split screen again. 1 second. I want to drop down below 1 minute. Got to catch up to 15 seconds. Y'all be patient with me. My fucking charts ain't 1 second, y'all. 1 second. Go to 1 minute. All right, I got to do this. 1 second. Do this. Settings. And if y'all just joining, man, smash that like button. I appreciate y'all joining. If y'all got any questions, y'all just ask. If y'all got any questions, just ask. I'm trying to find this trend line that I drew out. I can't find it over here. Let me blow this up 1 second. Anyway, man, this is not acting right. 1 second. All right, I gotta do this. Let's do this chart right here. I'm gonna go down to a 15 second. Let's go down to a 15 second. All right. Now on the 15-second time frame, we're talking about high frequency trading, right? So we run up, we take out this high right here, liquidity, and then price drops, right? It drops. When it drops, right, I want to show you how many opportunities you could have potentially, if you was trading, right? Because I don't know what y'all doing if y'all not trying to learn how to trade. Trading is like one of the last freedom things we're going to have, right? I don't know if y'all been keeping up. AI, things are getting replaced. The job markets are getting real. You know what I'm saying? So learning trading is one of those things you want to pick up going forward in the future. Not saying you got to do it full time, but it's something you definitely want to have because shit getting crazy out here in society. So if the day you get started with this and continue to pursue it, the better. If you starting too late, you might not have time, right? It's going to be too difficult for you. The pressure is going to be on. So why not start right now when you got a full-time job or whatever? Just start. You got to start it. Stop being lazy and start learning how to do this because they're coming for the workforce, right? They're coming for everything. So that's what I'm trying to tell y'all. So look, we take out liquidity, right? And price drops. And then it creates this little, what is this right in the chat? What is that right there? I'm just showing you how many opportunities there are to find trade setups. What is that? On a 15-second time frame. That's a SIBI. So when we trade back into it, right? We trade into it. That's an opportunity to put your sell limit order in the market to short it, right? But you got to have an objective. What are your objectives? Well, look over to the left. Look over to the left. You can find liquidity resting below the market. Right here. Sell side liquidity, right? All you're doing is looking for lows and fair value gaps. That's all you're doing. You find your entry point and you start looking to the left. You can get out at these lows right here, or you can hold for longer term lows, or you can hold for these lows down here. You know what I'm saying? So that's what you're doing. So on a 15-second chart, how many opportunities are? Well, there's one SIBI. That's one entry. Here goes another one. Sell side imbalance, buy side inefficiency right here. We drop again. Is that random or is that symmetrical? Is that like a, is that, come on now. What about this SIBI right here? Trade right into it. Drop again. How many opportunities are they going to give you? Let's zoom in a little bit right here. You see that right there? What about this SIBI right here where price pokes it and goes? You know what I'm saying? Let's highlight that. That's called institutional order flow entry drill. If y'all never heard of that, that's what that's called, where the algorithm will poke it and go. Look how it trades into it and then drops. And then it takes out liquidity, right? And it goes further, drops some more, takes out liquidity. But how many opportunities was that? How many opportunities was that? That was 1, 2, 3, 4 opportunities to find a position in the market to trade to lower levels. Let's go down to a lower time frame. Let's go down to a 5-second. Down to a 5-second, right? Now on the 5-second chart, right? Getting a little crazier. So what do? We go up, look to the left. We take out liquidity. This is what I'm trying to tell y'all. This is what the market makers, this is what the algorithms are doing. It's not random, right? It's not random. Take out liquidity, right? Price drops. There goes a what? On a 5-second chart, right? Let's see how many opportunities. Let's get in right there. 5 second. Boom, right there. I'm gonna give it another color. Orange. And that's a 5-second entry. Where's the 5-second entry compared to the 15-second entry? It's higher, right? So you're getting priced at more of a premium because you're dropping down to lower time frames. Look how price trades back into it. Is it random that it trades right to the midpoint? What if I draw a Fibonacci on that? Right? Let's draw a Fibonacci on that, inside that gap. Drop it right there. Boom, right there. And let's add some quadrants. Let's add some levels to it. Let's add the eighths right there. Is it random? No, it's not random. It trades into it. It's using these levels as weakness. And then it drops some more. And when it drops again, this is a 15-second SIBI. But guess what? On the 5-second, there goes a 5-second SIBI right here. Boom. Is that random? No, it's not random. Let's draw Fibonacci on that as well. Get more details. Is it random how price trades into these levels? Boom. Look at that. Nope. It's not random. It just drops. Not random at all. And then when it drops again, here goes another 5-second SIBI. And they're overlapping with the 15-second, right? So it's confluence. You get double confirmation, confluence, that this market is going to want to drop lower. Every time it trades into it, it's not going beyond the 50% level. It's respecting below the 50% level, and it trades into it again. And then what does it do? Sell off. I like the fib. Like that. Sells off again. And when it sells off, it stops. Where does it stop? Hit something, then it trades back into, boom, 15-second SIBI blended with a 5-second SIBI right here. Is that random? No. Sells off again. I can refine this. Look, another 5-second SIBI right here. So many entries that you could be taking. Drop, drop, drop. Drops again. 5-second SIBI. Drops again, and then it attacks liquidity, right? It hits the liquidity. Once it hit liquidity, they're taking profit. And then it drops some more. Another 5-second SIBI. Right here, 5-second SIBI. Trades into it, drops. They create a range. Check this out. Daily range on the 5-second from high to low. What I'm trying to do is divide it into premium and discount. You tell me if it's random, right? Y'all tell me if it's random. We drop down, right? We take out this low over here. We trade back into the range. When it goes to the premium, from this swing high, trading into that SIBI, it drops, create this low, trades back up. Equilibrium, above equilibrium is premium, right? Trades into the premium. And then look over to the left. What is this right here? On the premium side. So if you want to be looking to short the market or at any level, you short it at premiums. You don't buy it, you don't short it at discount. You wait for it to come to a premium. Trades into premium, 5-second SIBI, and then guess what? It drops again. Is that random? Is that random? I don't think that's random. And then it drops again. Some more. That's just that's icing on the cake. That's dessert for the market makers. Do you need that as a trader? No. As a trader, you get out right there. Boom. Or just below it. Do you need this extra icing on the cake with the cherry on top? No, you don't. And then it reverses, and then they're buying it back, and it goes the other way, etc. So what y'all think about that? Did you learn something? Did you learn something? Is that amount? Is it a lot? Is it confusing? Do you realize how much money can be made with what I just showed you? Do you realize how much money can be made with what I show you? I don't think y'all realize that. For y'all that are brand new, make sure y'all hit that like button, subscribe. Hit that like button, subscribe. And then I zoom back out to the 15-minute time frame, and look, it doesn't even look like on the 15-minute, right? It doesn't even look like I was sifting through the matrix. So back on the 15-minute, I took y'all down to a 5-second chart. But when I zoom out to the 15 minutes, you can't even see what I just showed you, right? So I'm in there surfing in the matrix. And I'm like Neo in the Matrix. And this is what I'm trying to show y'all. I'm Neo trying to lead y'all to the white rabbit. Follow the white rabbit. Outlaw Crump. That's a lot of great work. This shit goes on all day, every day. Outlaw. All day, every day. When I just drop down to that 5-second chart, I'm trying to convince y'all. I'm trying to tell y'all this is where the market makers are playing while you're stuck putting your money into an asset, holding it for dear life. You're holding your asset for dear life, and they're playing. We in the 21st century, bro. We in the new age of everything, and this is what they're doing. Look how many setups I just showed you on the 5 second, but you can't even see what I just showed you on the 15 minute. You can't even. It's like ants. There's a whole different world going on beneath the earth. Well, the same logic is going on in price in these markets, and I just showed you from an algorithmic perspective what that looks like. Y'all just over there scratching y'all heads, man. Y'all just I got 18 people in here. Y'all just scratching, y'all just like, okay, whatever. Are you going to apply this? That's my whole point. Are you going to apply the information and the knowledge? Are you going to apply this, what I just showed y'all? Do y'all realize what I just showed y'all? Okay, let's do this. Let's go to the CME, right? Let's go to the CME, the good old faithful CME website. Put this in perspective, right? Because I don't think some of y'all understand. Let's go to the CME. Let's go to the markets. Let's go to cryptocurrency. Let's scroll down. And you go look for Bitcoin futures, right? Bitcoin futures right there. Click on it. And then you're going to go to specs. And then you're going to scroll down. And what you're looking for is minimum fluctuation price right here. And when you find that, right? You're going to look over to the right. And it's going to say $5 per Bitcoin, right? So every $5 move, listen to what I'm saying. Every $5 move in Bitcoin is $25 per point. Every $1 move in Bitcoin is $5. Are y'all not understanding that? So let's go back. Remember that every $5 move in Bitcoin is $5, but we can make it simple. Every dollar move is $5. So let's look at this. Go back to Bitcoin. And we're going to put it in perspective. Let's just say, right? We entered the market at the very top after taking out liquidity. Let's say we enter the market at the very top. And we enter right here at the midpoint of the gap. Boom, right there. And we're going to measure how many dollars it was from that high down to this low. And I'm gonna need y'all to pull out y'all calculators so y'all can do some math. It's not hard. And let's just say I hypothetically enter right here. Boom. And we drop all the way down to right here. Boom. Just like that. Because I'm sitting here trying to tell y'all, while you investing long term, this is what the smart money is doing. That's a $226 move in Bitcoin. So remember, if you're trading futures, which that's what the institutions are doing all day, every day, they're coming out with new crypto products, Solana, XLM, HBAR. They're coming out with all these derivative contracts for crypto that they're going to be trading. And if you don't know what you're doing, if you know, you know. But if you know how to learn this skill, you can participate. But y'all pull out y'all calculators. $1 move in Bitcoin is $5. We had a sell-off that was around $226. Y'all do the math. Outlaw Crump, he said, I trade every day. I just don't know how to trade what you're trading. There, he said $1,100. Let me do the math. Let me pull out my calculator. I'm rounding it off to let's round it off to 230. Round it off to 230, right? Round that shit off to 230. So let's say, no, we're going to do 225. Do 225. Let's just say 5 times 225. That's $1,125, right? I got 1,125. You can round it off to 130. It's around the same ballpark. But how long did that take? All right, let's just show you. Let me show you how long would that have taken. Entry to take profit right there. 7 minutes and 30 seconds. 7 minutes and 30 seconds. I don't know if y'all know what that feel like, but it's a high. It's a high stronger than drugs. That's why they empower. That's why these people playing this game. That type of high is stronger than any drug. Well, I can't say that because I don't know about drugs, but that high is a different type of high, okay? To earn $1,130 in 7 minutes and 30 seconds. How does that feel? What you think you'll feel like? Outlaw Crump, you say, I trade spot assets. This is interesting. Welcome to my world, Outlaw. Follow the white rabbit. Follow the white rabbit. Welcome to my world. I'm just Morpheus, all right? I'm Morpheus. You Neo and I'm Morpheus. How about that? You're the chosen one. You're the one. Everybody here is the one. This shit is not widely taught. This is like this information is not publicly known. I mean, it's known. What am I talking about? It's known, but there's lacking information in this shit. There's a lack of information and teaching and knowledge in this. So that's why I'm here. I'm here to educate and teach about trading certain markets. Omar, a Boss Vision. Who trades one contract times 10? Yeah, well, Lenny, I ain't even get there yet. So when let's say, all right, let's do this, right? Let's do this. So we know, okay, let's come back to the CME. Y'all pull y'all calculators out. We know if we were trading Bitcoin futures, which is a regulated product. So for y'all that are trading spot, nothing is regulated. I mean, we don't trade spot, right? We don't trade. You invest in spot. You take your capital and you trade derivatives, which is the paper markets. So if you're buying an asset, I wouldn't be, unless you up significantly, I wouldn't be trading it like you know what you're doing, because most people don't know what they're doing. You need to come to a regulated environment, find a regulated broker that offers you regulated crypto derivatives, and you can trade these markets. But for this trade example, let's just hypothetically say you're somebody, let's think like, I'm not even gonna say institution, they got too much money. But let's just say you got $150,000 in capital. I'm gonna repeat. Let's just say you got $150,000 in capital. That's your equity that you're gonna put in a broker account, right? And y'all tell me in the chat, especially y'all that are brand new or new to this, if you had $150,000 in capital, how much of that capital would you risk per trade? I'm gonna let y'all tell me what y'all would risk. I'm just getting some sentiment. If you had a $150,000 in capital, how much would you risk per trade? I'm talking one per trade. How much would you risk of that capital per trade in percentages? Okay, Lenny, 1 to 2%. Okay. Anybody else? What about you, Outlaw? Daryl, you agree, 1 to 2%. Omar, on the safe side, 1%. Okay, shout out to you, Omar. Okay, so the general rule of thumb, the safe rule is 1% to 2%. 2% is kind of aggressive, right? Especially if you don't know what you're doing. If you somebody brand new trying to trade, don't trade more than 1%. You actually need to trade under 1%. You need to trade between 0.5%, 0.75%, or 1%. But let's just say if we had $150,000 in capital, right? And we only risk 1% per trade, what would that value give you? So you put in your calculator, 150,000 times 1%. No, Outlaw, you say $30 max. No, listen, you got $150,000 in capital. How much in percentages would you risk of that capital per trade? You got to think now. Got to think. And this is why I say the education got to come in. If you got $150,000 in capital per trade in percentages, how much would you risk? I forgot my question because I was trying to help Outlaw out. 150,000 times 1%, which is, y'all are right, 1,500, all right? That's when you, now that might be crazy to some of y'all. Like if y'all was to lose $1,500 real quick, because guess what? There's risk involved, but it's safe risk. All right, you using safe risk. If you have $150,000 in capital and your rules say you can risk 1% of that capital per trade. Now this doesn't mean trade every day. This doesn't mean trade all day. This means 1 or 2 trades per week. How about that? Let's say you only can trade 3 times a week, right? And each of those trades, you only can risk 1%. Well, every time you trade with $150,000 in capital, you're able to trade at risk. You're able to put up 1,500 risk. So what does that look like with this information right here that I'm showing you with Bitcoin? So let's do the math. Jot it down. You can lose $1,500 with 1%. So for every point, right? So let's do every 5 points. Every 5 points for Bitcoin, that's $25. How many points can we risk for Bitcoin before we hit our limit of $1,500? So I'm gonna do let me do this. $60. There, you say 60? 25 times 60. Yeah, okay. Now check it out. You're able to have, which is crazy. I'm gonna show you here in the chart in a minute. You're able to have 60 with one contract, right? With one contract, you're able to have a 60-point stop loss, which is kind of wide as hell, before you hit $1,500. I'm gonna show you something. Let's go down. 60 points stop loss. Let's go back to the chart. I'm gonna show you. And let's zoom in on my entry point right here, right? So let's just hypothetically say I enter right here at the middle of the fair value gap, right? Where does my stop loss need to be at? Your stop loss needs to be, check this out. It can be right here at this swing high, or it can be up here at this swing high. It's whatever your risk allows you, pretty much. So let's say from my entry to right there. This is gonna be crazy, y'all. Some of y'all, right? This is gonna be crazy. So from my entry to putting my stop loss right here, how many points is that? Round it off for me. Round it off. How many points is that from my entry to my stop loss? I don't know if y'all can see it. Let me zoom in a little bit. From my entry up to this swing high right here, how many points is that? And remember, you're able to have up to 60-point stop loss. Shout out to you, Daryl. Appreciate it. Y'all probably some of y'all are squinting, but I appreciate it. But yes, you're able to have look on this particular trade setup right here, right? You're able to have a 7-point stop loss. 7-point stop loss, and price doesn't even come near it, right? So let's come back to over here to the CME. Remember, what's the calculation? For every dollar, that's $5. For every dollar moving Bitcoin, that's $5. So all you're gonna do is take 5 times 7, and that's going to give you your risk for this trade. 5 times 7. 5 times 7. We rounded it off, Omar. We rounded off to 7. So 5 times 7, right, is $35, right? But you have $150,000 in capital. And on this trade right here, you have a stop loss of 7 points, but you're allowed up to 60 points. So let me type it out for you. $35 risk. Right? One contract. Stop loss at this high right here. All right. So does that come, check it out. Does that even come near your risk that you're allowed to put on the trade, right? Does that come anywhere near the risk you're allowed to put on that trade? If you're able to lose, you're able to put on $1,500 risk with a $150,000 contract. Does $35 come anywhere near that 1% of your trade? That's what I'm trying to tell y'all. Y'all smash that like button, subscribe. Does $35 come anywhere near? And remember, check it out. Remember, listen. Why does it look like $35? If I have $150,000 and I'm able to risk $1,500 per trade, why am I only risking $35? Y'all forgot what time frame I'm on? I'm on the 5-second chart. The 5-second chart. So what you did was you refined and reduced the risk by dropping down to these lower time frames. You refined and reduced the risk by dropping down to these lower time frames. Outlaw, you said, wow, looks like the price doesn't return. It does. I'm no Outlaw. Let me show you, bro. Let me cook. Let me cook. When you say that's your risk. Before you even take a trade, you gotta define the risk on the trade. You got to define how much you already defined that I have $150,000 in my account and I can risk 1% per trade. That's $1,500. And this particular trade doesn't even calculate. Lenny, I'm gonna get there, Lenny. Outlaw, look at Lenny. He's trying to give you the game. I'm gonna get there. I'm trying to show you before we even add contracts to this, because depending on your equity size, you can add with $150,000. You're well funded, right? You're funded well. So you might be looking at this like, oh, $35, that doesn't return. Bullshit. Omar, that's why you got to pay for them lower time frames. They know where the sauce is at. Well, Omar, let me convince you of this, bro. Are we complaining about paying for the time frames? Because if you know what you're doing, this one trade can pay for the damn time. This one trade can pay for everything you're talking about as far as paying. And guess what? When you run as a business, when you operate as a business like they do and like I do, paying for subscriptions for time frames, all that is a monthly expense. All that is deductible from your business expenses. That's all that is. That's part of your business. You got to pay for this to operate your business. So that costs nothing. You'll get that back in the tax return for your business, right? So that's nothing. That's your least of your concern. Pay for the subscription. Pay for the subscription. So anyway, that $35 risk, right? I got to put this in here. 7-point stop. 7-point stop loss. All right. $35 risk, 7-point stop loss, one contract. Now, okay, we know that we can risk $1,500, right? And we're allowed that $1,500 risk can allow us a 60-point stop loss. And I'm showing you, even if I place my stop loss at this high up here, to show you from entry up to that high. Even if I place my stop loss up to that high right there, that's 25 points, which doesn't even come close to what I'm able to risk per trade. I'm allowed up to 60 points for $1,500, but my stop loss is $25, right? Excuse me. On this scenario, my stop loss will be $25, which is nowhere near 60. So I reduce my risk down to 7 points. Now we can consider, because we're only risking $35, I can add more contracts. Because if y'all don't know, in futures trading, you're able to add as many contracts as your equity allows you to add. If you don't know what I'm talking about, go research it. So how much, okay, I'm gonna let y'all do the math. How much, if I'm able to risk $1,500, right? And you don't have to risk the whole $1,500 on one trade, but you want to maximize the opportunity. How many contracts can I add with a 7-point stop loss before I get the $1,500? Let me do some math. So remember, it's $25 for every 5 points. $25 times. I'm doing the math right quick. $60. Okay. 60. All right, check this out now. Wait. Y'all check my math, right? Check my math. Let's come back over to see me. Am I able to add 60 contracts, right? How many contracts am I able to add? No, wait a minute. I'm confused right quick. I done confused myself because I don't trade Bitcoin, so the math is kind of off. How many contracts? How much does it cost per contract? That's my thing. Lenny, 40? I done confused myself right quick. You saying 40 contracts. All right, let's just do 40 contracts. Fuck it. 40 contracts. First of all, I need to see how much equity. I gotta, 1 second, bro. What? So I didn't even look at that. But anyway, depending on your broker, that's what depends on how many contracts you can add. But let's just say we add 40 contracts, right? So let's do this. Let's do the math. Let's do the math. And that's depending on your broker. All right, so one contract, 7-point risk, right? Now let's do the same thing with 40 contracts. Let's do the same thing with 40 contracts. And what we're gonna do is what you're gonna do is you're gonna take your risk. 1 second. You're gonna take your risk and multiply it by 40. So you take 35 times 40, and that's gonna give you your risk. 35 times 40, that's going to give you your risk. So if you put on 40 contracts, right, that's going to be 1,400. So let's do this. $1,400, which is right under your max risk. $40 contracts. Right there. So what we're trying to do is we're trying to maximize our risk on the trade, right? We're trying to maximize our risk on this trade. So we're able to trade up to 1% of $150,000. That's $1,500. But we're going to add 40 contracts, right? 40 contracts. This is what it would look like with one contract. It'll be $35. But we're going to maximize our risk per trade because our equity allows us to do that. And we're going to add 40 contracts, 7 points, right? 7 points. That's how, if price goes against you for 7 points, that'll be crazy for some of y'all. But if it goes against you in 7 points, it stops you out, you lose 1,400 with 40 contracts. Outlaw, as I'm watching this, I'm trying to understand from a spot and stock retail trader's point of view, like in the price of Bitcoin, what's the price retail will be seeing at that very time? Let's stay on point right quick. Let's stay on point. If y'all can help him out in the chat, y'all help him out. Let's stay on point. I'm trying to get through this. Help him out in the chat. But okay, if we was trading futures, and this is the spot. This ain't the futures contract. I'm just using a scenario. I'm using the spot for a scenario. But we trade into the fair value gap, and we're aiming for, what was it, 200 or something points? I'm going to measure it out again. Measuring for take profit right here for about 225 points, right? So you're going to take You're going to take 1 second. You're going to take 1 times, this is what you're going to do. You're going to take 1 times 225, right? 1 times 225. You're going to get your answer. And you're going to multiply it by 40. And y'all tell me in the chat, what would that be? You're going to take 1 times 1 times 225. Get your answer, multiply that by 40. Because that's 40 contracts. And you tell me the answer, what would you get? 1 times 225 times 40 My bad, y'all. Not one. 5 times 225. Excuse me. 5 times 225 times 40. Y'all tell me in the chat what y'all get. Excuse me. Because it's Lenny, it's $5 per dollar. So every time Bitcoin moves $1, it's $5. So you take 5 times 225, get your answer, multiply by 40. What y'all got? And remember, we're staying within the rules of our risk. Boom. Shout out to you, Shep. You got it. $45,000. $45,000. And guess what? It might sound crazy to y'all. No, we see this all day, every day. It's not crazy. You're risking $1,400, right? For a reward of $45,000. Does that sound insane to y'all? And guess what? How long did it take? 7. Well, let me do it again. From entry, take profit. 7 minutes and 30 seconds. 7 minutes and 30 seconds. What does that sound like to y'all? Does that sound like some bullshit? Y'all let me know now. Let me know if it sounds like some bullshit. Let me know. Now, this is somebody with $150,000 in capital. And you know what you're doing. That's the thing. You know what you're doing. You've been doing this for a minute. You've been studying your ass off. You know everything about the market as far as what you're trying, from what I'm teaching, smart money concepts. And you know what you're doing. And then you can go in there. I just outlined it to you. What's the possibilities of what you can make. Omar, sounds like a blessing. I agree. So, okay, for the people, again, for the people that are sitting back invested in Bitcoin, people are not even getting a $45,000 return in Bitcoin. But you mean to tell me market makers on lower time frames, they're high frequency trading, they're finding setups, and they're making way more than $45,000. I'm just using this for somebody who's well funded as a retail trader. There's many traders that have millions of dollars. But a well funded trader, you can work with $150,000 in capital and go get a $45,000 return. Now that's insane, to be honest. So let's do this right quick. Let's do this. Yeah, the margin requirement will be insane on that. So we're not even factoring that in. We're not factoring that in. So, AWB sounds like a lot of jingle in our pockets. People work 365 days to make that. Hell yeah, or less, Omar, or less. Now let's do this in percentages, right? Let's do this in percentages. So, Outlaw, you said sheesh. Yeah, man. So if you take, what is the return on investment with that? So if you take 150,000, no, what you do is you would take 45,000, you divide it by your equity, 150,000, and multiply it by 100. That'll give you your percentage. That'll give you your percentage on this trade. AWB. Most people underestimate the power of what boss is teaching. AWB. That's because you've seen it. You've seen it, bro. You've seen it real time. You've seen it for yourself. Yeah, man. So, okay. Before I even start talking about the money, I outlined it from a technical perspective. All I'm doing is putting different numbers to it. It's all, you can do this and make $150. You can make $1,500. You can make $10,000. You can make $200. All in this same market structure, all in this same trade. It all comes down to your equity, how much equity you have. Because we got some high rollers up in here. They got some people out there that got a lot of money. And then there's some people that are just trying to start out. And, you can start out with less than $1,000 in some cases. That's all I'm saying. Like, you can start off with like less than 5,000. Let's say you got $1,200. You can start off with that. But if you know what you're doing, you can start compounding equity. So the percent return on that trade that I'm showing you, if you had 150,000, you risk 7 points and you add 40 contracts, right? And it sells off down to this level, 220 points. That is a 30% return on investment. That's a 30% return on investment. That's crazy. After you do that, right, you don't have to do nothing else for the rest of the month. You know, it all depends how active you want to be. If you get a day like that, and that's a nice day right there. If you get a day like that, what else do you need to do? A 30% week, you know, compounded. If you aim for 5 to 7% every week, I'm not even saying 30% is high, right? That's very high. But guess what? You're not even gonna get that in crypto long-term investing this year. Listen to what I'm saying, y'all. Listen to what I'm saying. And I'm not downplaying nobody. I'm just saying people are not going to get a 30% return on investment this year in certain assets. But you mean to tell me smart money, they're getting a 30% return in 7 minutes and 30 seconds? Y'all not going to believe it. Y'all won't believe it. I'm sitting here showing it to you though. Yeah, this is the standard, not the micro, Daryl. That's what I'm saying, Daryl. Like the micros are affordable for people like us. I still trade micros. There ain't no shame in my game. My thing is I don't have the equity like some big money. I'm trying to get that big money equity. I'm getting there. But once I get the big money equity, then I can do crazy shit like what I'm showing you. But I'm showing you this for a reason because there are certain entities out there doing this. Plus, you know, this ain't nothing. A $45,000 trade ain't shit to a large institution. Coleman, you said that would change my life. Learn this skill. I'm not pushing y'all to learn this. I'm not even saying, hey, come buy nothing from me. I'm showing you right here on my channel what to do. You can go back and watch this, and I'm highlighting fair value gaps, liquidity sweeps. I'm showing you different things, and then I put the money on top of it. Hell yeah. While listen, people won't see a 30% return in crypto for the next. I don't want to put that out there, but probably in the next year or two, you probably won't even see a 30% return on crypto. By the time, you know, life is going to start happening, bills going to start happening, emergencies are going to happen. So life is life, and while you sitting there waiting for a 30% return on crypto. But I just showed you how smart money they're making 30% return on investment in 7 minutes. 7 minutes and 30 seconds. You just got to have the skill. You got to have the equity. That's the thing. And you got to have risk management. You got to have clean risk management. And this is Bitcoin. For y'all that's in my Discord, we follow the NASDAQ all day. But the same shit is right here in crypto. Y'all smash that like button, yo. All right, let's look at XRP right quick. I'm not going to give a... What y'all want to hear? Y'all want to see the algorithmic shit of XRP, or y'all just want a quick breakdown of XRP? I'm sure y'all just want that. See, what I'm teaching y'all don't want to hear it. Y'all don't want to learn this shit. So y'all want that long-term analysis for XRP, right? So let's go ahead and go out to the 3 month. XRP, right? Nothing has changed. It's quiet right now. XRP fluctuating. It was down 133. Now it's at 140. Real quiet in the streets right now for XRP. Let me highlight this. We're real quiet in the streets for XRP. Shep, you want to learn? Shep, I know you want to learn. You've been here. You've been advocating. You've been really wanting to learn. So I might give it to you, Shep. I might give it to you. Pause. I might give it to you. No Diddy. So look, I'm gonna start from the top down. Again, 3 month fair value gap. I called this out about 2 years ago. I highlighted this level, and we dropped down into it. And what I'm showing you now is long-term high time frame analysis. This ain't getting into the technical intraday shit. This is something completely different. So we're getting that long-term investing view. That's what most people are here for with XRP, long-term investing. And look how we dropped down into this BTC, right? We've been in here, and we're probably going to close. This is a 3 month time frame. We're probably going to close the quarter inside of this gap. So we got 1 month and 5 days left until we close the first quarter of the year, 2026. Now I'm gonna drop down to the monthly. On the monthly time frame, right? We're just we drop down consecutive months, 1, 2, 3, 4, 5 consecutive months, drop down into this BTC, and now we're just consolidating. I want to look a little closer. Let me add some more levels to this. Let me take this. Let's add some quadrants. I mean some eighths. Boom, like that. Let me add the 16ths. All right. All right, I'm gonna go back right quick. Let me go back to the quadrants. Boom. All right. So, okay, we're just consolidated right now monthly. We only got 1 day and 21 hours left in the month of February. And then we're gonna go into March. That's gonna be the last month of the first quarter. This shit repeats every year, all month. It ain't going nowhere, right? Just a different season, different market conditions, but they repeat over and over again. 2 years ago, they gave us a bull market. Guess what? Not financial advice, but god damn it, people should have took profit up here. I'm not even gonna hold you. You should have. Instead of let's go do this right quick. Let's go to YouTube. Let's go to XRP. And I only say that for the people that's been in for years. You should have chipped something off, paid yourself. Inside info leaked. We have proof XRP Clarity Act. Yeah. Whatever. XRP the proof we needed. 90% won't make it. 589. Who cares? Listen, check this out. XRP go to 100 tomorrow, right? And we got derivatives, XRP products. All I'm going to do, right, is go show you the skill sets that I just showed y'all, and I'm going to go catch up. Like, let's say I'm just going to go trade it in the derivatives futures, and I'm going to outperform whatever the spot asset going to do. That's my goal. That's what I believe in. I'm going to, as a trader, once you learn this skill set, you know what you're doing. I'm going to go in here and outperform. I'm going to be in sync with it because I've been watching it for years. And I'm going to pretty much outperform whatever the spot asset is going to do for me because I'm going to be trading leverage and margin. That's my goal. Holy shit, this is unreal. Jay Claver, there go y'all boy. $26 XRP, this pattern confirms it. So a lot of shit like this, right? A lot of shit like this was 7 hours ago. $26 XRP, this pattern confirms it. Does he even talk about charts? No, he doesn't. So y'all will go click on this. He gets 5,000 views. How do I get this? He'll go get 5,000 views and he doesn't even show you a price chart, right? So that's my thing. But people like me, I'll take you inside of the price action. AWB, we going for 589 tomorrow. Then we woke up from my dream. Yeah, man, deep dream. Let's go down to the weekly. All right, on the weekly time frame, right? For the past few weeks, we've been consolidating for XRP. I'm gonna do this fast. Been consolidating, right? I'm gonna go down to the daily. Daryl, 3 digits in a year is what gets all the views. Yep, you are being blocked by the algorithm. I'm sure. Omar, I'm sure. I don't give up. AW needs to lay off the Fetty. All right, so for XRP, right? I'm gonna just at glance watch this. Watch this now. Now XRP might be good. It all depends what they want to do. We might not go any lower, but check this out. I'm gonna draw Fibonacci from this high up here, right? Swing high down to this low. What I'm gonna do is I'm gonna get the Dylan range. I'm gonna get the Dylan range right there. Y'all tell me in the chat real quick. Is XRP in a discount or is it in a premium? It's clear as day where it's at. But does that confluence with that 3-month fair value gap? Is that a confluence? Is it in a premium or a discount? Once you find the Dylan range that it's operating in, it becomes more evident, clear as day. Yes, Coleman, discount, right? Why? Because it's at the mid, you see the midpoint of the range, swing high to swing low. Why that high right there? Let's measure. You can go back 20, 40, 60 trading days. I'm gonna put it on the current candle, go back. 60 trading days. Let me do this right here. 20, 40, 60 trading days. Let me go back 60 trading days right here. And then when I go back 60 days, it just automatically gives you a range from high to low. Boom, just like that. That's why I drew that Fibonacci without even putting this ruler up. I can just glance at it and see it. High to low, 60 trading days. You find the range. And that's the range we're currently operating in. And you're right. We're at a discount. Equilibrium, which is the midpoint below it, discount. Also, that's a confluence with the 3-month. That 3-month level fair value gap is a discount. So you got 2 confluences that show you that we get discount. So what should smart money be doing? They should be in here accumulating, right? So let's take a closer look As I zoom in on this, right, I see they trade down. I look at these lows right here. That's liquidity. So I'm gonna highlight these lows. Sell side liquidity right there. All right, sell side liquidity. But what I want to do is I want to hide the 3 month. Y'all know where we at on the 3 month. I'm gonna hide that. Boom, just like that. Sell side liquidity. Now I'm gonna focus in on price right here. I'm gonna go down to a 15 minute. Go down to a 15 minute, right? And just at glance on the 15 minute, I see that almost like Bitcoin, we rallied up, right? Look over to the left, took out buy side. Took out buy side liquidity. Let's look at this high right here. Buy side liquidity right there. All right. We rally up. Same thing on Bitcoin. It's almost identical, bro. You can't even make this shit up. Went up, take out buy side, consolidate, displace. All right. Shift in market structure. All right. Same shit. What is this right here? After taking out liquidity, y'all in the chat, what is this right here? SIBI, right? I'm going to highlight that. Sell side imbalance, buy side inefficiency. SIBI. Is it random? Price trades back into it. Nope, it's not random. Trades back into it. What do we have? What do we have? So once we took out liquidity and we dropped lower, we got a dealing range on the 15-minute time frame. High to low right here. Right? High to low, dealing range. It goes up from discount. Once it took out liquidity, it dropped. It come back up to premium side of that range, right into the SIBI. And what does it do? It drops lower. It aims for liquidity right here, right? And then it also trades down into this what? Over here, BTC. Let me highlight that. Buy side imbalance, sell side inefficiency right here. And you tell me if that's random or not, because I don't think it's random. Boom, just like that. We trade up into that. Rally up. I'm going to drop down to a 5 minute. On the 5 minute time frame, what do we have? We got a range on the 5 minute. So check this out. This swing high right here down to this swing low right there. That's a range. High to low, dealing range. Right there. All right, so once we drop down to that fair value gap that I have highlighted orange, right? That was a key level that they took profit at shorting. They traded back up to the premium side of the range, right? Now, once we go up to the premium, look to the left. What is this right here in the chat? What y'all see right here? What is this? Y'all tell me in the chat. What is that right there? Quick response. Give me a quick response. Drag it all the way out to the right. SIBI, not a busy, SIBI. Sell side imbalance, buy side inefficiency. And look, it trades right back into it. Give it another color. This is for XRP, y'all. Trade right back into it. Boom. It drops. So if I just focus in on this area right here and go down to lower time frames and it drops, you can short from here. Check it out. From here down to here, take profit. Let's go down to a 1 minute. Before I do that, I want to measure this. Let me measure this SIBI. Remember, this is a 5 minute SIBI at premium. 5 minute SIBI at premium. I'm gonna throw up my quadrant levels. You tell me if it's random, right? So when it trades back into this SIBI, right? Is it random that it trades to this level right here and rejects it? No, it's not random. Not random. So what I want to do is I want to drop down to lower time frames. Let's go down to a 1 minute. I want to go down a little bit lower. Let's go down to a 15 second. And on the 15 second, right, when we go to the 15 second, we run up, take out liquidity right here, right? Minor buy side liquidity. We run up, we trade into the premium. We hit a 5 minute SIBI. And then what does price do? It drops. Low resistance, low resistance. I might need to go down a little lower. Let's go down to a 5 second. Wait, where am I at? Where am I at? It's acting crazy. It's acting funny. It doesn't want to pull up. Oh, there you go, right there. So on the 5-second chart, right? 5 second, which is kind of not clean. But we trade up, we displace lower. There's nothing in here that's clean, so it's too fast. When you see it like this, it's moving way too fast, moving super fast. So I'm gonna go back out to the let's go back out to the 15 second. Bear with me, y'all. Bear with me. But I'm showing you how. Let's say, for example, we take out liquidity. We're in a premium. And we drop, right? And there's some things that I'm not showing y'all. It just takes time. I don't have the time right now to like I said, man, this shit requires mentorship level. So there's some things in here that you might not be familiar with. And I'm not mentioning why is this dropping, why is it doing that, etc. But I'm just giving you the bare bones of it. It goes up to a premium, it drops, it takes out these lows right here, right? It's not random when it drops down and hits these lows. Look, you can short from here to here, be out. From up here, be done, right? And then it comes back up and it consolidates. And let's just say right here, boom, entry. Check it out. This sell-off during the macro, right? This happened during the macro. Right there. What macro was it? It's not random. Shit is only doing stuff on time. Time first. Time first. So in the afternoon, around 250 to 310, it trades up macro time, and then it drops specific times. And we have another macro in the this is in the afternoon from 315 to 345, trades up into the SIBI right here, drops. Another SIBI right here. So it's giving you multiple entries at specific times of the day. That's what I'm trying to tell y'all. It's giving y'all multiple entries at specific times of the day. And then it drops again. And when it's dropping, start looking to the left. What is it aiming for? What is this over here? You see these lows? That's liquidity. They're aiming for liquidity, right? So you can start scaling out of your position, especially if you're adding multiple contracts. And yes, you can trade XRP. Matter of fact, let's go to the CME. CME, markets, cryptocurrency, drop down. XRP futures, specs. And if you want to look at the XRP contract, for every drop, so every drop for XRP, that's $5. Very, very expensive, right? So yeah, they're over there trading XRP. And entry points, drop, sell off. And this thing is moving, yeah, by drops. It's moving by drops, but every drop is fucking $5. Excuse my language. Every drop is $5, right? So every 0.001 for XRP, that's a $5 fluctuation in a contract. That's what I'm trying to tell y'all. So imagine this right here. How many drops would that be from this entry right here down to this low right there? That's 53 drops. You do the math, 5 times 53, and you will get an idea on how much that is. 5 times 53. That's $265. Now, we're not including margin. We're not including broker fees, none of that. We just, with a raw price estimate, 265, boom, right there, right? That's with one contract. And then guess what? It drops again. And what is it aiming for? You can get out right here at that, remember, 5-minute fair value gap. And not just, it doesn't just drop into the 5-minute fair value gap. Look over to the left. You know what I'm saying? You got liquidity right here. You see these lows? Old swing lows, old swing highs. That's where they're leaving behind liquidity at in the market. And if I just drag this out all the way to the right, boom, right there. That's not random. So I'm trying to tell y'all, man, not random. You looking at somebody who spent so many hours, bro, years. So I'm 5 years in and doing this consistently every day, no days off. And that's how I'm able to see this shit. Like I'm Neo in the Matrix. Remember Neo watching the numbers? That's how I'm able to see this shit. And I'm going to continue to go and get better. And it's just going to continue to unravel and unlock for me. But as soon as they take out the liquidity underneath here, what are they doing? They're offloading their shorts, right? Offloading their shorts to reaccumulate, to buy back, to go higher. And that's exactly what they do. That's exactly what they do. It takes out liquidity, right? Look to the left. What is this right here, y'all in the chat? What is this candle right here? I want to see how many people get it right and how many people get it wrong. What is this right here? And you tell me if it's random. What is that right there? Yep, inversion. It was a SIBI, but it's an inversion. So they take out profit, right? They take out liquidity. They displace it higher. They trade back down. Is it random? Is it random that they trade right back into the midpoint? Boom, just like that. Inversion. So fair value gaps can be inverted. If you don't know, we can use them to sell off, but then once we take out liquidity, we can use them to invert, and it trades right back down into it. That's your entry right there. This candle right here. Wait. This candle right here, this is a breaker. So we got a low, high, lower low, displacement higher, price trades back down, and guess where it trades back down into? Look at this candle right here. It's called a breaker block right here. Boom, just like that. You can't make this shit up, man. You can't make this shit up. And I'm teaching it for free for y'all. I'm teaching it for free. Can you make that up right there? Well, look at the precision. Can you make that up? Can you make that up? No, you can't make that up. By the tick, by the point, whatever you want to interpret it as. You can't make that shit up. Drops right back down into the breaker. I don't refer to breakers all the time, but that's a breaker. Yeah, man. You say sheesh there, like sheesh. Yeah, man. And then also, if you say you don't see the breaker, there's a BTC right there. And guess what? It boom, just like that, and it takes off. Yep. And then it takes off. Now, some of y'all gonna think y'all can get in here because y'all see it, but there's more components to this. I'm just giving y'all fundamental shit. There's way more to this, right? And it takes time to teach people. You know, that's why I've been coaching people for the past, I don't even know how, 7 months, 8 months. I don't fucking know. It's been a long time. I've been coaching the same group of people, and you know, there's a lot more to this, you know? So yeah, you can see fair value gaps, but you got to have context and a narrative behind it. So check it out. You enter up here, right? Let's say you buy it back at a discount. It goes up, start looking to the left. You're looking at old highs, right? Look at this swing high right here. Right there. You see that swing high? Guess what price does? And you tell me if it's random that you buy it back at discount, right? And then it goes up and then it taps this swing high right here. And then it sells off. You tell me if that's random. Precision. And then it sells off. And if you wanted to scalp it, here goes the SIBI right here. And it comes back down to discount, right? It comes back down to a discount inside of a range, consolidates, and it goes back higher. But you tell me if that's random. How you can short it down and then buy it back and get out right there. Yeah, man, we killing it, man. We killing it. So y'all say y'all want to learn, right? So that's what I'm pretty much trying to lean towards. You don't see, like, I don't care for the long-term, even though I'm long-term invested in some things, there's more power in because I've been doing this for a while, there's more power in doing what I'm showing you as far as like learning this skill set and learning how to compound money, learning how to compound equity. That is what smart money is doing. They're not holding on to, well, I can't say because they do everything, but smart money traders, they don't believe in holding nothing for a very long time. They believe in putting their capital to work and reapplying that capital and putting it to work constantly. And some of these concepts that I'm showing you, that's exactly how they're doing it. That's exactly how they're doing it. And like I just showed you, there's so much power and potential in this. You just got to learn the skill. You got to learn the skill. What's going on right now in price? Well, right now in price, we went back up to a premium. We swept liquidity right here. Buy side liquidity. We dropped during the macro. And we're currently in the Asia session. So right now in Asia, We're just dropping low resistance. SIBI. You can see it just trading into the SIBI. And we just took out these lows as well. Well, we haven't taken out these lows, but it looks like we're about to sweep this low. Right there, sell side liquidity. All right. And I want to see displacement. What time is it? 10:25. So we about to come up to the 10:30 marker for the hour. Let me see, 5 minute. Got to zoom out right quick. On the 5 minute, we went back up to premium. Let me look at the daily. So took out liquidity. We went up to a premium. I'm not even gonna lie. I think XRP is gonna come down a little bit more. Can you look at H bar? Yeah, I'll look at H bar. H bar. Let me go look at H bar right quick. Then I'm gonna get up out of here. I ain't gonna hold y'all all night. H bar, right? So I haven't looked at H bar in months. But just at quick glance, let's look at a 3 month top down. Okay, we're in that 3 month BTC. We're also in an order block. And what's crazy is we got a lot of level lows down here, but let's check it out. 3 month, not clean at all, not clean. Let's go down to a weekly. On the weekly, similar to XRP, inside of a discount. If I look at, for example, this high down to this low, that's a 20-week range. We're in the discount clearly. Go down to the daily. On the daily, for H bar, clearly in a discount. It's currently trading at 10 cents. I don't know how much more you want as a discount, but that's a discount. If I take this swing high right here down to this low, discount, we're right at equilibrium. So we're on the discount side of it on the daily. And on the daily, we got a BTC right here. So we traded down to a fair value gap. And right now we're just consolidating. So right now, H bar is at a discount. And I can't tell you what to do, but I mean, 10 cents is evident if you're looking to long term. What you see me do right now, I'm looking at it as a trader. So I really don't, let me stop. I'm in such a habit to go down to lower time frames, but I think you're asking from a long-term perspective, and from a long-term analysis point, it is in a, it's in a discount long term. So if you're somebody who's looking to buy the spot version of H bar, there you go. It's in a discount. That's all I can tell you. 10 cents. Do I see it coming any lower? If it does want to go lower, look out. You know what I'm saying? Because it's going to wipe out all these lows in the market. Right? It's going to want to come down and wipe out all these lows. You say you like my trading analysis? I know. That's, you know, initially this is what I started with right here. You know, just long-term analysis. But I don't trade H bar, and I don't know nobody here that trades it. So, and when I say trade it, I'm talking about leverage or spot. I ain't talking about you buying spot and then you swing trading it. No, that you're not doing it correctly. I'm not going to apply intraday analysis to that. But the person that asked me about H bar, I'm sure they're asking about long-term. So that's what I'm going to give it to you. I'm not going to give you that the technical shit. It's easier on higher time frames when you're long-term investing. Just holding, bought at 8 cents. Great review and back testing session. Yeah, boss. Appreciate it, Daryl. Appreciate it, man. Yeah. This ain't nothing though. You know what I'm saying? This ain't nothing, bro. Like, I don't know if y'all can see that I'm a little bit sharper or a little bit, a little bit more dangerous. I don't know. Can y'all tell I'm a little bit more dangerous? Since I've been doing it, I haven't streamed every day, but do y'all sense a little bit more danger in me? I might be a little too dangerous. I might not can come online too much talking about this shit because I'm giving y'all too much information. Might be a little too dangerous, but guess what? I'm making y'all dangerous. The more y'all soak up, the more dangerous y'all become. And guess what? This live stream don't even scratch the surface. It doesn't even scratch the surface of what I'm doing. Stranger danger. Shout out to you, J-Man. I didn't mean for H-bar. I meant I enjoy your teachings. Okay, Shep. Yeah, for sure. Appreciate it. I haven't even scratched the surface, man. I don't even scratch the surface. Got that sniper action. I don't know, man. I think I'm a drone, goddamn. I'm a drone. I'm a drone in this. I don't know if y'all been keeping up with shit going on worldwide, but I feel like, you know, the drones are becoming the new sniper. You know what I'm saying? I'm like seek and destroy out here, like picking my target. What is this? XRP? Yeah, XRP is just consolidating. I'm not interested right now. But man, I appreciate y'all joining, man. I ain't gonna keep y'all all night. I'll probably do more of this. If we can get some excitement, because the markets right now, they're quiet. They're just real quiet. You know, the top of the month, we sold off. There was some excitement. And then the past 20 days, it's been consolidating. So there's nothing exciting about crypto right now, unless you want to learn how to trade what I'm showing you, like I showed you a minute ago, dropping down to the 5 minute, doing intraday analysis. There's always something going on. That's the thing. There's always something going on. But if you're a long-term investor, you would not understand that. You're not concerned about what's going on intraday. There's way more going on than the eye can perceive. Way more going on than the eye can perceive. And that's why you got to learn these concepts and learn what I'm teaching you. But man, y'all make sure y'all smash that like button. I ain't gonna hold y'all too much longer or longer at all, period. I appreciate y'all joining. I went from Omar, I went from calls to mentorship. So it went from signals to, hey, people wanted to learn, you know? So I kind of got rid of the signals because I went to more of a coaching, more of a teaching perspective, helping people out understand these markets. So that's what I've been doing. I don't do the signals. I just be coaching. So if y'all are interested, y'all can sign up to my Patreon if y'all want to get coached. You know, the link is in my bio, So y'all click that link. Thanks a lot. I have a great night. Appreciate it, Shep. All right, man. I appreciate y'all joining. I look forward to doing the next one. It's not just going to be, by the way, it's not going to just be crypto. We're going to be doing futures trading. I might do some Forex in here and there, but it's not just crypto. So I'm not all about crypto. I'm about trading. That's my main perspective first. So trading. Speaking of trading, let me go look at the futures market right quick. I'm just going to glance at it. I'm not going to get into it. Let's come to the NASDAQ. Right. This is the market that we currently trade every day. Every day. We caught the sell-off. So look at the NASDAQ right quick. People in my community, people in my group this morning, you see this sell-off in the NASDAQ? Caught this sell-off, right? And we was participating in that sell-off. So we shorted the market this morning. We trade up. We took out overnight highs. We swept some liquidity. Boom, right there. That liquidity was the London session high. So that was the high overnight. We trade up, sweep it. And guess what? We break down, caught that move, shorting the market. Listen to people like Lenny, because we over here killing it. Getting better, you know, not bragging, just getting better with this, because this is a skill that you're going to want to learn going into the future. And once you learn it, they can't take it from you. They can replace you from your job, because that's a whole lot of that is going on. But this is one thing they can't they can't take it from you unless they take away trading, which they're not going to, that's their game. That's what they do. They're not going to take this away because this is where they thrive at. This NASDAQ market makes up damn near the bulk of the economy. The NASDAQ and the S&P make up the bulk of the economy as far as stocks. This market right here is a $1 trillion market compared to crypto, which is only in the billion. Well, it's low trillions. This market right here is in the quadrillions. The NASDAQ, the S&P, the futures, quadrillions. So these are more lucrative markets. So crypto can get a little boring. So while crypto is a little boring, I'm in this market every day. TZ, that was a beautiful price action. Yep, shout out to you, TZ. So this is what I'm trying to convince y'all. It's not just about crypto. We can trade anything. You learn this skill set, we can trade anything. I haven't been in the chart. Right now, just consolidating, right? Consolidating high resistance price action right now. High resistance, I'm not touching it. I wait for specific times of the day. The session that I trade is New York. We're going into Friday, coming off a sell, and we're going into the new month. We're coming to the end of the month, and we're going into the new month. So I'm pretty much done for the month. I did what, 7% today, something like that. 7% today on this sell-off. And imagine if you do 7% per week, right? 7% per week. Okay, check this out. What's up, Outlaw Crump? Let's say you do 7% per week, not a day, 7% per week, right? Now let's take, y'all got y'all calculators out. Y'all press 1 if y'all got y'all calculators out. Press 1 if you got your calculators out. All right, Daryl, you got your calculator out? Who else got their calculators out? And I'm gonna wrap it up after this. I'm gonna wrap it up. Pull your calculators out. I'm gonna give y'all some perspective. Who else got their calculators? Pull them calculators out. Shep, you do it in your head? No, you can't do this in your head, Shep, what I'm about to show you. You might can. I'm not underestimating you. Okay, if you take, let's say y'all got $5,000, right? $5,000, and we're aiming for 7% each week. Each week, right? We're aiming for 7% each week. How many weeks are there in a year? How many weeks are there in a year? Come on now. We start with $5,000. We're aiming for 7% each week. Daryl, 52 weeks in the year, right? All right. $5,000 times 7%. Right? How $5,000 times 7%. That's $350, right? So you're adding to your equity. Now, what's $5,000? I'm trying to get the math in my head. Excuse me, y'all. Excuse me. I'm not the best math person. I can do this, and I know math. This is what I'm trying to ask. $5,000 for 7% every week, compounding. What is that after 52 weeks? $5,000 equity times 7% every week, not every day. Once you hit 7% for the week, you're done. You can hit 7% in 1 day. You can hit 7% in 2-3 days. Once you hit 7%, you're done. 350 times 52. This is how I do it. Watch this. I start with 5,000, right? And I say plus 7%. Start there. And what I want you to do is, damn, you might be right, Shep. 350, right? So what is that? 350 times 52. What do y'all have? Check it out. What do you have at the end of the year? I just did the math. What do you have at the end of the year? 350 times 52. What is that at the end of the year after you started with $5,000? Are y'all confused? Are y'all confused? What y'all math got? See, I told y'all to pull out y'all calculators. Daryl. 350 is not compound. Okay. This is what I do, y'all. This is what I do, right? This is the scenario, right? This is the scenario. And it's hard to explain until you put the math behind it in numbers. Watch this. You take $5,000, right? And every week, and every week you aim for 7%. It's compounding instantly. It's starting to compound. But every time you go up in equity, you're still using your risk. So as your equity increases, right, that allows you to add more contracts. And once you have the ability to add more contracts, okay, check this out. I need y'all to understand what I'm saying. $5,000, right? You're only going to risk 1%. $5,000 times 1%. That's $50, right? $50. But you're looking for 7% each week. So 7% each week is going to compound. So every time, let's say you start from 5,000 to 530, that's, or 530, yeah, that's 7%. Every time your equity increases, your risk doesn't change. So let's say you go from $5,000 to $10,000. Well, once you go to $10,000, what's your risk? $10,000 times 1%, that's $100, right? So now when you have $5,000 in equity, you was only able to use, let's say, one contract. But once you go to $10,000, you're able to use two contracts. So what you're doing is you're doubling the amount of contracts you're able to use every time your equity increases by certain percentages. And as you're able to as your equity increases by percentages, you can add on more contracts, and that's how the compound effect kicks in. That's what I'm trying to get at, but I can't explain it right now. Matter of fact, let's go to the handy. Watch this. Forget everything. Let's go to this. Chat GBT. All right. God damn it. Chat GBT does the quick math. All right. Watch this. I'm going to ask it this, and I'm going to get out of here. I'm not going to hold y'all much longer. I am trading micro NASDAQ futures contracts. I have $5,000. Excuse me. $5,000 in equity. God damn it. 5,000 in equity, right? That's my starting equity. We're starting with 5,000. We're trading with micro NASDAQ futures. I want to compound 7% per week. I'm only, check this out. You got to be specific. I'm only risking 1% of my equity per trade. As my equity increases, I want to still risk 1%, but be able to add more contracts that stay within my risk. What would my account look like after 52 weeks? Now let's see what ChatGPT say. You're thinking, look, check it out. Look, I know I'm not off, y'all. It might sound crazy. It might be throwing y'all off. You're thinking correctly. Fixed percent risk plus fixed percent weekly growth equals exponential compounding, right? I didn't mention nothing about compounding, right? Let's break it down clearly. Assumption, starting with $5,000, right? Weekly return, not everyday return, weekly. This is doable. I don't understand. Bro, I done had days, check it out. I done had days consecutive, like 3 days in a row where I did 30% trades. All right. I'm being conservative. And some people might say this ain't conservative. I've had multiple days where I've done 30% trades in like 3 or 4 days in a row. So, but that's not sustainable. I'm gonna tell y'all that now. That's not sustainable. That it can go to your head. But I've done it. 7% per week is easy. So compounded weekly, right? Duration is 52 weeks, which is 1 year. Risk per trade, 1% current equity. You scale contract as equity grows, but always cap risk at 1%. And then it gives you the formula. Now let's calculate it. After 52 weeks at 7%, that's $170,000. Right? You started with $5,000 freaking dollars, right? If y'all don't think this is possible, you gotta do the math. And there's a formula to doing this. Compound. The most powerful thing on this planet is compounding, right? Y'all know that. Albert Einstein. So growth milestone time. So let's say you start with 5K, right? After 13 weeks, which is 3 months, you go from 5K to 12K. It starts slow. That's what y'all might not understand. It starts slow, and you're adding contracts. You're adding contracts as you go because your equity remains. So as your equity grows, you're able to put on more risk and still stay within your risk. After 26 weeks, which is 6 months, you took 5,000 to 29,000, right? After 39 weeks, right, which is 9 months, you go from 5,000 to $70,000. The eighth wonder of the world, compound interest. Yes, Omar. I'm trying to show you how to do it in trading and not doing much. 7% is not doing nothing at all. I did 7% today, right? And I only traded twice this week. 52 weeks, which is 1 year, $170,000. So imagine chipping away at, listen, it doesn't have to be 7%. It could be 5%. It could be 2% per week, whatever you want to make it. Just don't go extreme and say like 60%. You know what I'm saying? Don't be like, oh, I need to make 40% per week. No, stay realistic. Aim for like 7% per week. My personal goal is what? My goal, I'm gonna tell y'all, is 10% a week. 10%, once you know what you're doing, that's nothing. I'm aiming for 10% every week. At the end of the month, that's 40% per month, right? That is very doable. Now check it out. It's fluctuates. So let's say that I have a week where I only gain 6% or 7%. I'm content with that. I'm not going to demand that I have to get 10%. I'm very content with, oh, I made 6% this week. Oh, I made 7% this week. Because you know why? I'm going to let time do the heavy lifting. That's the whole part about this. Time. I'm going to let time do the eighth wonder of the world. That's the power of exponential compounding. Important reality check. 7% per week, sustained 52 weeks, annual 364. But okay, that's like if I use one contract, 364% return. But if we're using compound, multiple contracts, you can compound. Now check this out. One more thing. What does this look like after 2 years? 7% could take a year in long-term investing. Yep, Shep, you're 100% right. But guess what? I'm sitting here telling you I made 7% today. But you gotta cap it off. Once you hit a certain goal, you stop and you come back the next week. You stop and you come back the next week. Hopefully I'm putting some shit in your ear to make you realize how powerful trading is. So I say, what does this look like after 2 years? So after year one, right? Now this is aggressive, but after year one, you start with 5,000, right? After year one, 170,000. Once you get, check it out now. Y'all might not, come on, man. Once you get $170,000 in equity, what do you think you can do with 170 grand in equity? So let's do this. I'm gonna just do this right quick. Let's go to the chart and I'm gonna be done. I'm gonna wrap it up. Man, I'm just trying to show y'all. So this is, let me hide some of this shit right quick. Let me hide this. Let me hide, what is this? Hide that. And I'm gonna hide this. I'm just gonna clear up my chart right quick. I'm gonna give y'all some perspective and I'm gonna be out. So it says that once you get to 170 grand, then it takes another year to get to $1 million. And y'all might not believe this, but hey. So we go up this morning, right? This is from today. We go up this morning. We take out buy side liquidity right here. Take out the liquidity. Yes, Daryl, that's when the water starts flowing. It starts slow, but once compound kicked in, once the compounding effect kicks in, it goes fast. So go down to the 1 minute. We take out buy side liquidity, right? We take out liquidity during the morning session, AM session. We take out liquidity, right? And this is the NASDAQ for y'all don't understand. For y'all that don't get it. We take out the NASDAQ, and what is this right here? I'm gonna give y'all 3 entries. What is this right here? What is this right here? I'm gonna highlight it real quick so I can get y'all going. We got a inversion fair value gap right here. Inversion. Matter of fact, I'm just gonna use the inversion gap. I'm not gonna go any further details. Just use the inversion gap for entry, right? Not a breaker. We take out liquidity, we drop. The breaker would be right here, but we trade back. This is an inversion fair value gap right here. And we trade back into it. We trade through it. We trade back into it. Let's say my entry is at the midpoint of the inversion fair value gap. Right here. Boom, right there. All right, now we got to define our risk. Now, how do we do this? We got to define our risk. So if you don't know, every point, and we're not going to use the micros, we're going to use the minis. Minis are larger contracts than the micros. We're going to use the minis because guess what? We traded for a year. We went from 5,000 to 170,000 with compound interest. Now we have $170,000 in equity. Now let's take $170,000, right? Let's take 170,000 equity times 1%. What is that in the chat? 170 times 1%. How much can you risk? How much can you risk? From entry right here, my stop loss is going to go right here. 9 points. Yes, Daryl, $1,700. So with $170,000 in equity, we're able to risk with 1%, no greater than 1%. We're able to risk $1,700. That might be a lot for y'all, but not when you got $170,000 in equity. So we wait for our trade, we take out liquidity, we drop down entry, boom, stop loss. Okay, $20 times 9, because that's the risk, because this is my market, I trade this all day. $20 times 9 for one contract. We're able to risk $1,700, but our risk on this particular trade that I'm showing you is 9 points. So you take 20 times 9. What y'all got? Y'all gonna be blown away. Y'all gonna be blown away. 20 times 9. $180. Yes. So what does that mean? If this trade right here says, if one contract, what does that tell y'all? If I'm able to risk 1,700 and the trade setup that I'm looking at my risk is saying, hey, one contract, $180. Well, what does that tell you? You can add more contracts, right? So let's just take 20 times 9, and let's multiply that by, let's say 40. No, that's way too much. 20 times 9 times, let's say 15. Too much. We breaking over 20 times 9 times 5. All right, let's say this. Let's say we risk 5 contracts. No, let me add a little bit more. Fuck that. 20 times 9 times 7. 20 times 9 times 8. All right, let's say we add 8 contracts. We're gonna keep it moving. We can add more, but we're gonna add 8 contracts, right? 8 contracts. 8 contracts, 20 times 9, which is our risk, times 8 is $1,400, $1,440. Right? $1,440. That's our risk on this trade. That's our risk on this trade. $1,400, right? We're able to risk $1,700. So we're a little under 1%. We enter right here. Our stop loss goes right here. Stop right there. $1,400. If I get stopped out, does it come anywhere near your stop? No, it doesn't. Now check this out. We're using 8 contracts. And when price drops, what is it aiming for? Let's find some realistic targets. It went crazier than that, but let's just keep it short and simple. Short and simple. I'm gonna put it in perspective. Let's just say we aim for these lows right here. You see these equal lows? They're relatively equal, right? These lows, that's your target. That's where you get out at as far as take profits. So the drop on this trade from entry, right? We got 170,000 in equity, 1%, 1,400. We drop, trade down to that level right there. That's a 135 point sell off in the NASDAQ, and we're using 8 contracts. So y'all do the math. 20 times 135 times 8. What do y'all have? 20 times 135 times 8. What y'all got, man? What y'all got? Shout out to you, Daryl. $21,600. So if you check, so look, we defined our risk, right? We defined the risk. We said, hey, my equity, $170,000, because we spent the whole year compounding. It started off slow, but once we got to about a year in, we had enough equity, $170,000, where you can do way more. You can do way more in contracts and equity. We stayed within our 1% risk. We actually stayed below our 1% risk. No, you're right. We got stream keeps cutting out, so I missed the question. Yeah, I don't know. Everybody else, did it cut out for everybody else? But look, we stayed within our 1% risk. We didn't go over our 1% risk. So we are risking $1,400 for a return of $2,160. Does that sound crazy? If you have $170,000, I'm showing you the math. Does it? Okay, now let's come back to ChatGPT. When it says, once you get about a year in, right, of compounding, and you have $170,000, how quick do you think it's going to take from 170 to $1 million in 18 months? But you got to know what you're doing. That's the whole part of this. You got to know what you're doing. It takes time. $21,600. Yeah, Omar, $21,600. $21,600. How much time? It's going to take half that time. I just outlined the trade right here today. From today, we're playing with numbers. Most people don't have 170,000 in trading equity. That's what, but if you do, because you went from 5,000 in the 1 year, now you're going to have the whole point of getting 7% a day, and this is still getting 7% a day. So what watch this. Take 100. What you're going to do is you're going to take 21,600. I'm going to tell you the percentage return on that. 21,600 divided by 170,000 times 100. All that is, check this out. All that is 12% return. That's a 12% return. We probably can round it up to 13% because it's like 12.7. All this is a 12% return on investment. 12% return on investment in 1 day. Didn't y'all just hear me when I said I had 30? I had 3 or 4 days making 30% return on investment because of trading. Does that sound too difficult in trading? Now investing, yeah, but as a trader, 12% is not it's not a difficult thing to do, and we stay within our risk management. So if we would have got stopped out $1,400, that was not going to hurt you because all you risk was less than 1% of your equity. You have $170,000, you lose $1,440. It doesn't hurt me. I stay within my risk. You got to stop and wait for the next day or the next trade set up. But that didn't hurt me if I got stopped out. But the reward is greater than the risk. But guess what? It kept going. It kept going. So imagine this. Let me hide this. Now let's get real crazy, right? Let's get real crazy. Because, this is actually what it did today. Let's do this. We still got 8 contracts on the trade. 8 contracts from midpoint down to this low way down here, right? This low right down here. That is 433 points in the NASDAQ just today alone. 433 points today alone in the NASDAQ. We're still risking $1,400. We still have 8 contracts. All you're doing is 20 times 433. Let's go ahead and round it off. Let's round it off. 435. Let's round it off. 20 times 435 times 8. What do y'all have? $69,600. If you think I'm bullshit, if you don't think this is real, I don't know what to tell you. 69,600. What am I defining? We drop down. Look over here. See all these lows in the market? They went down today and took out all these lows in the market. You see all these stacked lows in the market? That's what I have highlighted. Liquidity, relative equal lows right here. All these lows, that's what they targeted, because guess what? They left behind their orders in the market. And when they sold the market off, what you think they was targeting? They dropped it straight down to those lows. After they take out the lows, it goes into consolidation. Day over. Just like that. But 69,600, what would that be as far as percent return? You're going to take 69,600 divided by 170,000 times 100. That's a 40% return on investment in one day. Just like that. 40% return. It's actually 41%, but a 40% return on investment in one day. After that right there, after making 69,000. So does it, check it out. Now let's go back to this. If you can make, what was the first? If you can make anywhere between 21,600 a day, if you can make 69,600 a day, but you have this much equity, is ChatGPT lying about going from 170,000 in 1 year to the 2 year mark, $1 million? Do you think that's some bullshit, or you think that's real? Do you think that's bullshit, or do you think that's real? I'm gonna let y'all be the judge. I'm gonna let y'all interpret it. Don't say I'm not putting you up on game. Said my friend made 100K on that move with 40 contracts. I'm not doubting it, Omar. I'm not doubting it. Yeah, so I'm gonna leave compounding. So compounding. Oh, it's very real. And we not even talking about institutional money, bro. Remember when I said this market right here, this NASDAQ? This is a $quadrillion market, right? So there's trillions of dollars flowing through this market in one day or throughout the year, right? There's trillions of dollars, billions per day flowing through this market. Your little $69,000 win, that's nothing in the grand scheme of things when you're in here with smart money and big institutions and banks. That's nothing. That's nothing for you. I mean, when I say that's nothing, that's a big deal for you. That's pennies for large institutions. You got to know what y'all dealing with. Smash that like button, subscribe. Yes, pocket change, Daryl. Pocket change. This is real numbers, bro. If you don't believe it's real, then I don't know what to tell you, man. This is a real thing. You just got to understand. Okay, first thing you need to do is learn how to trade. Learn these skills. Learn what I'm showing you. And then learn the power of money management, risk management, and compound interest. Compounding. Start slow. You can start with $100. You can start with 1,000 and look for returns on investment every week, not every day. So check this out. If I'm aiming for, let's say 10% a week, right? That's my goal. That's my personal goal. I aim for 10% a week. But do I need to demand that in one day? No, I don't. So if I'm there's 5 trading days in the week, and I'm aiming for 10% on the week, then I can break that down to what? There's 5 days in a week. What should that be? I'm testing y'all math skills. How much should I aim for? Out of 5 days, how much should I aim for per day? Boom, there you go, Daryl. 2% a day. If I'm aiming for 10% on the week, I should be looking for 2% a day. Do I have to get it all in one day? No. Because guess what? There's trades where I can get 40%. There's trades where I can get 10%. There's trades where I get 2%, 1%. So as soon as you hit that, it could be a Monday. You hit 10%, you done for the week. Don't do no more trading. It could be a Friday. You haven't hit your 10%. And you got to close the week with 7% or 5%. Be content with that. The whole goal is compounding each and every week. Not day, but week. Aim for a weekly goal, compounding, and then let time do the lifting and the magic. I'm telling you, I've done the numbers too many times. I'm just now getting into this myself. You know what I'm saying? I'm just now figuring this out. This long journey I've been on, I'm just now figuring all this out, compounding and seeing it. There was times where I would overtrade. I'm making 20% in a day, 40% in a day, and I'm not respecting the return on investment because I want more. I was being too greedy. But eventually I mature and I understand shit. I don't even need to do 20% a day. I can just slow grind percentage every week and let it compound over time. I know how to trade. You're going to get at least 2 good setups per week. And there you go. So that's something to think about, man. If y'all learned something today, press 1, hit that like button, subscribe, share the video. I'm teaching over here. You know what I'm saying? That's my whole goal with this channel. I'm trying to teach. I'm trying to be educational. All that other shit is bullshit. All that other shit is bullshit. We need to get back to the original YouTube where we over here teaching and learning, and you can actually learn something. Y'all hear the authentic side of me. I'm not selling you nothing. I'm telling you, I'm putting you on game. So y'all appreciate y'all joining, man. Hit that like button, share the video, and I'm gonna get back with y'all on the next one. Peace out.